Business. Schneider Electric also in focus. Now, is this just about a different roadmap for the business, or is it to do with the price fixing that they were accused of? They've said they might appeal that particular decision, but the business was fined. And in the wake of that, just days later, they decided to change their CEO. We'll keep those in focus then, Guy.
Absolutely. Let's fold all of that into the market open. Here we go. It is time for the opening trade this Monday morning. It's Monday. We wait for Tuesday. We really wait for Wednesday, probably for clarity, maybe some clarity on the US election. So I don't expect we're going to see a significant shift in the outlook for Europe this morning. There is so much still to price in this week. Monday morning feels a little early to get involved, and as a result of which you're not really seeing much sense of direction, certainly at an index level. The FTSE 100 barely budging. The Stock 600 is down by less than 1/10 of 1%. The IBEX is down by 1/10 of 1%. We wait for the CAC. We wait for the DAX. We wait for the SMI this morning. The DAX down 1/10 of 1%. The CAC, as mentioned, maybe a little bit of softness there versus its peers, down by 0.3 of 1%. But there doesn't seem to, at an index level at least this morning, Critty, to be a clear sense. Below the surface, maybe some single stocks.
A sector story for sure is emerging, and a lot of it's coming from this outperformance that you're seeing in the energy names, Anna. This idea from an index contribution, Shell, Total, BP, right at the top of the pack, right alongside the likes of Anglo American, by the way. To the downside, though, it looks like some of those healthcare pharmaceutical stocks that have been the outperformers lately are actually dragging the index down. The likes of Novo Nordisk, for example, among others. But right now, energy commodities very much in focus.
Yeah, energy, yes, absolutely. And Ryanair in focus. And, you know, there are a couple of reasons why things might be negative for the aviation sector. Not all of the airlines are negative today, but we do have Ryanair down by 1.4%. Some of the other travel and leisure-related stocks also following it down. Of course, we've had this update on what impact the Boeing delays will have here, but we also have the oil price moving a little bit higher, and sometimes that can be something that has some sort of impact. But that is one area of weakness. Personal consumer, discretionary, grocery stores, that's another area of weakness this morning. But some of that's a reversal from Friday. Reckitt Benckiser was a really strong performer on Friday. Today it's down by 1% and seems to be pulling that sector a little bit lower.
It does seem to be the energy stocks, though, as Critty mentions, that is interesting. It'll be interesting to see whether this continues. The election can have a major impact on this space. And it was interesting that the US majors actually reported softer numbers. There's been this big kind of concern around the discount that European majors trade to their US peers. I wonder kind of what impact the US election could have on all of that. In terms of other areas that we are watching, it's interesting to see real estate softening up a little bit this morning. In terms of some of the other names, are we seeing a movement in Burberry yet?
I
throw the hospital pass to Anna.
Stand by. I don't think so. No, don't think we've got that one open just yet. Not trading yet. So we watch with interest there. And Moncler, of course, the other side of that news story.
Vestas is up, which is interesting. Which I think the offshore wind, we're going to talk about this a little bit later on. Vestas is going to be potentially one of those stocks that could be firmly in focus. Yeah. Because Trump has indicated very strongly that he's not in favor of offshore wind.
Yeah, it's certainly something that has been, and you've seen this shown up in the likes of some of the renewable stocks. But he is in favor of solar, which is interesting. So if you really go into the nitty-gritty of some of the renewable story, there seems to be this kind of election bet emerging between solar versus wind. And again, something that we will be discussing throughout the rest of the show. But again, it comes right back to, in the meantime, while we await those election results, we are going to kind of see what what investors are supposed to do. And in that meantime, we've got the perfect guest.
Yeah, let's have that conversation. Nancy Curtin joins us, CIO at Ulti Tiedemann Global. Nancy, so nice to have you here with us.
Good to be here.
In such a consequential week.
It's a big week ahead.
It is a big week ahead. How do you set up for this big week ahead? We were just talking to one of our guests in the last hour who was talking about the number of people, the number of investors who are sort of reducing their exposure to the extent that that is at all possible to the results of the US election. How are you approaching this week?
So first of all, we say to our clients, you need to be long-term investors. We would not position ahead of this type of event, although it is going to have an impact on markets. And frankly, it's impossible to call. This is a photo finish, as we know, and it's not just about who wins the presidency. It's also about what happens in Congress as well. And I would say those are really very hard to call at the moment. So trying to position ahead feels a bit like fool's errand, but it's not what we do. We stay, with a client strategic asset allocation. And frankly, both candidates are pro-growth. So let's just put that in context as we look ahead.
Okay,
so 2025.
Okay, so can you see a way that either of these candidates can be good for risk assets?
Well, look, Kamala Harris is more of the same. Is that a bad thing? I mean, the U.S. economy seems to be doing pretty well. Take out the funky little jobs number last week, but we had some hurricanes and some other things affecting that. But that seems to be pretty good. I would like that one. That's not going to be bad at all. And of course, Trump, I think most people think he will try to extend the tax cuts and lower corporate tax rates, which might be a bit of a heroin boost near term to the market. But let's face it, we also have to keep an eye on the long end of the bond market in the United States. The fiscal situation is rather challenging. And so Harris stands for less of fiscal imprudence, so to speak. So, I think neither of them are particularly bad. Both are pro-growth. And I wouldn't say that only Trump is going to be good for the markets. Don't forget, the status quo is not so bad at the moment.
It's not so bad at the moment, but you mentioned that pro-growth policy, and critics of that argument would say that a lot of that comes right down to tax cuts and this idea that Trump is talking about these major tax cuts, which would then, to balance the fiscal issues, be offset by the tariff story. The tax cuts or the tax increases under Kamala Harris are, by a lot of Wall Street and a lot of corporate players, thought of as anti-growth. What would you say to that?
Well, first of all, are the tariff increases really going to fund those tax cuts? Sure. I mean, I think that's a bit voodoo economics. But anyway, I think what we have to recognize is dependent upon the composition of Congress, right? And even it looks at the moment like the Republicans will take the Senate. House still remains a bit of a big question mark. But it's not clear to us that either are going to have a significant majority. And remember, Congress doesn't always just vote along partisan lines. And so without a significant majority, maybe some of these things that we talked about, other than the tariffs, which can happen by presidential decree, may not get through to the extent to the rate, et cetera. Remember, there have been a lot of campaign promises over the last couple of weeks. They continue to multiply.
So let's talk about, aside from the presidency, let's talk about the Congress and the split there as well. What would be the first agenda item, do you think, on the congressional space? We're here in Europe. We talk a lot about that defense spending story. Come January 20th, which, by the way, is 10 days after we hit the budget, what's the first thing on Congress's agenda?
I think Congress has to look at the fiscal rectitude of the United States, or lack thereof. Remember, even putting aside what Harris and Trump could put into place, we've got fiscal deficits of more than 6% as far as the eye can see. You've got an aging demographic in the United States, increasing costs for Social Security and health care. Not to mention, you saw that interest cost number, $1 trillion in the deficit that was announced at the end of September. So I think Congress recognizes both sides that this is a problem and they need to deal with it.
So you made the key point when you came on here that you are, of course, a long-term investor, but between the kind of inauguration of the president and of course, the congressional kind of buildup that follows, there's a meeting in December when it comes to kind of appropriations and where some of that congressional budget spending goes. And I'm curious, as we kind of wait for that lame duck period, how much of that might change things for an investor that may be more short-term?
I think that's very hard to call. It's going to be a barn fight. The whole debt deficit situation is a barn fight. that. And as I said, not all of Congress votes along partisan lines. So I think we have to wait and see how that turns out. It's going to be a lot more protracted, I think, than people think. But the key thing for us is to see what kind of fiscal rectitude, as opposed to just spending, gets applied. And by the way, the so-called bond market vigilantes, wherever they've been, are likely to come out if there's a lot of spending increases and we don't get past the debt ceiling, which will come again, as you kind of alluded to, in January. So these are risks ahead. But broadly, in our view, we think growth in the United States is good. We are overweight equities. We think that's still the place to be. There's a lot of more attractively priced stocks, not just in the U.S. large cap that we've positioned in, but also diversification. Key message for clients: make sure you're diversified. And we've got other things in the portfolio that serve as a ballast as well to equities.
So the U.S. continues to outperform the rest of the world. Is that true for the next 4 years?
I don't think so. So first of all, I mean, the U.S., there's a lot of strength and resilience there, a lot of good things happening, really.
Yeah.
The consumer's pretty strong, sits on a huge amount of home equity wealth, et cetera. But I think what's really interesting, we're in a global synchronized easing cycle. Let's not forget that. Bank of England likely to cut on Thursday. We've got ECB will cut probably in December. We've got no lack than 10 emerging market economies that have cut interest rates. We've got fiscal and monetary stimulus coming from China. May not be enough. I don't know. We have to wait and see how that turns out. But the point is, global synchronized easing cycles should help global growth, and that should help the global
And the Fed's
economy.
included in that.
What's that?
The Fed's included.
And the Fed, of course, is included. We do think the Fed will probably cut this Thursday.
Okay. And then?
That remains. I think they will be data dependent, and they will come out this Thursday, which we expect probably will cut, and talk about the fact that we will continue to watch the data ahead. Remember, they're looking at the neutral rate. Now, whether the neutral rate is 2.9 or 3.2 or remains to be seen. We're on a policy normalization path because as inflation's come down, real rates have gone up, which is a form of effective tightening. So we do think they need to bring rates down.
And what do you look at in Europe then, Nancy? We've talked a lot about the United States, and clearly a lot of the vulnerability around the election, if there is some, might fall elsewhere rather than on the United States. So are there stocks and sectors that you're actively avoiding right now with the election in mind, or no? Long-term investors don't need to think that way?
Long-term investors, emphasizing companies with great moats and great cash flow. That is the way to do it longer term. But I do think that Europe needs a growth strategy. Draghi talked about that from a macro perspective. Europe really does need a boost. But at the end of the day, Europe has always been a stock picker's market, and there are some great companies in Europe. There are not so good companies as well, like every other market. And so it's about really finding those quality companies, good competitive moats, et cetera.
You're confident you can find them when Warren Buffett says he can't?
Well, Warren Buffett got a little long on his skis there in his Apple holding. But, at the end of the day, we could easily have some turmoil here. We could have some volatility in markets.
Yeah.
Before last week, we were up, 6 weeks in a row. This is not normal.
You're happy with valuations, though, where they are at the moment?
Happy. The U.S. is expensive, right? I mean, let's not pretend it's not expensive. But I think a couple of things. The so-called Magnificent Seven traded 30 times earnings on average. The rest of the market, 16.9, 15% discount to its long-term average. So let's just bifurcate what's going on here. And the Magnificent Seven, that makes them vulnerable to disappointment. And we saw some disappointments in the recent earnings. The rest of the stock markets in the world, not so expensive. Mid-cap, actually, we think is attractively priced in the States. So you've got to pick your spots. But no, the U.S. market as a whole is expensive. But remember, profitability in the last decade and return on equity has dramatically increased in the States. I'm not going to bang the table here and say we pay anything, but I think that's important to consider as well.
Very nice to see you, Nancy. Thanks for dropping by to see us. Nancy Curtin, CIO at Alti Tiedemann Global. Thank you very much. Okay, the Core 6 looks like this morning. Schneider's certainly firmly in focus. Changing of CEOs at Schneider, generating a 1% move to the downside. But that looks pretty much in line with some of the other stocks we're seeing across Europe as well. So you've got Novo, which reports numbers later on this week, soft as well. In fact, everything is soft. Luxury actually looks like it's holding up, despite actually what is happening in China and maybe the anticipation that we don't get that much stimulus delivered this week.
Yeah, we'll certainly keep an eye on all those developments out of China this week. Let's focus in on some of the other stocks that are on the move this morning and picking up on some of the luxury clothing themes, perhaps. Here's Joe Easton.
So staying in luxury, we are actually seeing Burberry, the best performing stock in Europe today on the stock 600, up around 4.5% at the moment, was up around 7% at the open. Now, there is a report in the financial and luxury blogging website called a Miss Tweed, which I wasn't aware of before today. I'm told I should be aware of that website, but that is reporting that potentially Moncler is looking at the UK company Burberry Moncler over in Italy. Now, remember, LVMH's boss recently invested in Moncler, and the report says that he would be in favour of such a deal. It is getting some attention this morning. We're seeing again, as I say, the best performer in Europe at the moment. In terms of going the other way, though, Ryanair is coming down. Now, they've downgraded their guidance for passenger growth. That's actually falling more than it was at the open, now down 3% for Ryanair. Now, the interesting thing to note is that this downgrade to passenger growth could potentially actually be supportive of pricing, according to analysts. So that actually might take the sting out of that move. But at the moment, we are seeing a pretty steep decline, down 3% for Ryanair at the moment. The other thing for the airlines, as we mentioned earlier, though, is the oil price that is rising, potentially adding to those losses for Ryanair. And then here we've got the move higher in Shell and Total, with crude futures up around 2% overnight. So all of that playing into the same kind of theme at the moment. Then in terms of Schneider, Guy was running through that one a moment ago. A surprise change in CEO. Now, the CEO has only been in the role for around 18 months. So that is a bit of a shock for the market, potentially related to the strategy, but also some of those legal things that were mentioned earlier in the show as well. So that one coming down very slightly this morning. And then over in mining, we've got some deal news on Anglo offloading a third of a company over in Australia, according to a statement. It's worth around $1 billion, so it's pretty sizable, selling that for the company listed in London. We're seeing that stock gaining 1.5% at the moment for that one. Then in terms of the morning calls, some really interesting ones, and the Morgan Stanley downgrade is having an effect on ST Micro. They're the only broker recommending selling ST Micro, and the price target change was what stood out. They were at 35 euros on Friday. They're now at 20, so even more downside expected for a stock that has declined a lot due to the declining automotive demand, and that is what they're citing for that move. And then finally, Anna did mention Reckitt earlier, so we're going to look at that one because they've got a downgrade today. This one is over at Bernstein. Now, you remember on Friday, Reckitt had a big rally following news on the baby formula litigation, some positive update. But analysts at Bernstein are saying that that move is now overdone, so they recommend you come down on your holding in that one. And Reckitt falling 1.2% today in London.
Joe, thank you very much. Joe Eason from our equities team with some of the stocks that are on the move and some of the sectors. And my eye goes this morning to the technology sector, which is by far and away the worst performing sector here in Europe today. And that downgrade that Joe was talking about to one particular stock, ST Micro, could be part of the reason, but it's not limited to that. We see others within the space under pressure, not by much, but down 1% or 2%. As we go into this consequential week, consequential for so many reasons, the US election first among them, interest rate decisions, but also some of the earnings stories that we're going to get out of tech. How will the sector continue to defend the sort of price to perfection valuations?
The ST Micro story is fascinating as well, just given that it had like a 35% drop or something. I think was it 2 weeks ago? I think over in the U.S. So there's that volatility story, which is exactly what tech is not supposed to be or has not traditionally been going into election week. It's been that safe haven, and right now it just isn't.
Is it a value trade? Is it that kind of a trade still? It's interesting to see the volatility seems to be increasing around this space at the moment, which I think is interesting. So BE Semi's down 2.2, STM's down 1.85, ASMI down 1.58. These are they're not huge moves, but they are decent moves for a sector that has been really positive for quite some time. But what you're also, I think, beginning to really see is the differentiation within this space.
Yes, it's those companies that are really exposed to AI and those companies that are just really exposed to the troubles in the auto sector. You know, and those two are very different business cases, very different stories, and we'll see those continue to play out in the tech space.
You see, you got Volvo Cars this morning, I think, reporting some really weak numbers out of China once again. Again, that connection between those two, I think, absolutely fascinating.
Yeah. It absolutely is. I should mention, since you mentioned Volvo Cars, we should mention that the entire Stockholm, the Swedish index, by the way, is outperforming the rest of Europe. I'm not super sure what's driving it at the moment. It seems like a mix of factors. You've got the likes of Swedbank among like the Volvo and others trading higher. But again, outperforming the rest of the market by quite a little bit. We're going to dive into some of the other equity stories we've got our eye on in just a few minutes. Coming up on the program, Ryanair cutting its passenger outlook and it's blaming Boeing. We're going to bring you some of our interview with CFO Neil Sorahan. That coming up next. This is Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, is emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. DraftKings has become a top performer in the booming U.S. sports betting industry. CFO Alan Ellingson knows the company must stay focused on change and innovation to succeed.
We're in an evolving business. We're constantly evolving and tweaking our expectations for how things should be performing. We're constantly looking at things in different ways.
Watch Chief Future Officer, only on Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Weekdays at 9 a.m. Eastern, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
"21 minutes into the session, this is what European stocks look like. We are going nowhere in a hurry. There's a few anomalies here and there in terms of the single stock stories that we're watching, but basically I think this is a macro story, an election story, a later on this week story. But there are, as I say, some single stocks that are definitely worth focusing on this morning. Ryanair is one of those, Europe's largest low-cost carrier. Shares down this morning. The carrier cutting its passenger growth target for next year. The group's CFO, Neil Sorahan, speaking to Tom McKenzie a little earlier on. This is what he had to say about the outlook.
We were due to get 11 aircraft in the quarter between September and December. We've received 2 of those. I don't think we'll see any more aircraft this side of January or February. We look like we could be left short 10 aircraft, possibly more, into peak summer of 2025. We're now planning on the basis, as you said, of 210 million passengers instead of 215. We had the situation this summer and last summer where we were overcrewed, we were overscheduled, and we just don't want to be there again. So even if we do get some more aircraft, we'll use those as operational spares. So I'm hopeful rather than confident that I'll see those aircraft coming in. And as I said, we're now planning on the lower growth.
So you're planning, to be clear, you're planning on 10 fewer aircraft than you'd expected for that peak summer season next year. What does it mean for fares and pricing? Because fares have come down, 7% in the most recent quarter. Yeah, do you see further softness in fares to bring customers in?
In fairness, I think the declines are moderating. Bookings are strong into Q3. We think fares will be still modestly down. We're somewhat cautious on Q3, but I think it's in a better place than it was. We had the impact in Q1 of the absence of Easter. The consumers have been dealing with higher interest rates for longer. They're starting to unwind in Europe now at this point in time. Consumer seems to be a bit more confident. Capacity is definitely constrained. We just talked about Boeing. Their Airbus are having problems getting aircraft out the door as well with the Pratt & Whitney engine issue. We're seeing consolidation playing out with ITA and Lufthansa, and TAP is going to go up for sale. So I think capacity is going to be constrained for some time, which would indicate that potentially more risks to the upside than the downside on pricing.
CFO at Ryanair, Neil Sorahan, talking to Tom McKenzie a little bit earlier on this morning after they posted numbers and downgraded the outlook for next year. Let's get a sense of kind of how the various pieces of this story fit together. Global aviation reporter Sid Phillip joining us around the table. Sid, Ryanair's blaming Boeing effectively. They're not getting the aircraft they want, therefore they are not going to be able to carry the passengers that they expected to be able to carry next year. Is that reasonable? Is Ryanair's finger pointing at Boeing justified this morning?
It is to a large extent because Boeing is the only sole aircraft supplier to Ryanair. Ryanair is a all 737 operator, and so for them to be able to sort of offer the capacity they need to offer, they need to get the planes that they've ordered, and that's not really coming in at the moment because of Boeing's various issues.
In terms of therefore the supply-demand dynamic. At the moment, what they're basically saying is we're not going to get the aircraft that we want, but fares are soft. So I would have thought that if we're not going to get the aircraft that we want, the fares would be firmer because there wouldn't be the capacity. The capacity is not there to kind of reduce fares. So explain the issue with we're not getting the aircraft we want, but fares are still soft. That doesn't seem to fit together logically to me.
It doesn't. And also, I mean, remember, you're going to the slow season right now because, I mean, winter is typically a slower season. So airlines have to typically spur fares in order to get people on there. So they need to offer discounts, they need to sort of cut fares. And, I mean, Ryanair has seen a slow summer this year. I mean, the summer has been much worse than they had seen previously. And that's because airlines are struggling to see people have struggled with the whole cost of living, and they've basically decided not to go on holiday instead of paying astronomical fares. And so the airlines have seen that, and they've had to cut fares accordingly. At the same time, Ryanair gets a sort of they sort of spur demand. They offer services to places that other airlines don't really fly to, and they sort of get demand that way. So for them, it is a bit of push and pull, but analysts are hoping that given the fact that there's fewer aircraft, yields will be higher.
That was going to be my question, actually. If they do cut those flights, who's benefiting, if anyone?
It will be the airlines will benefit from it. If there's fewer flights, there will be much higher fares, and that's sort of the demand and supply equation, and that's what analysts are hoping for. That while Ryanair sort of cuts back its passenger forecast, they will be able to sort of increase fares and be able to sort of get more profitability.
Steve, what do we make of the comments around the budget? I mean, O'Leary never holds back on these things. We called it idiotic, I think. It doesn't like the increase in passenger duty, which you can understand, but then when you look at the size of that increase, maybe not that big on some of the low-cost fares?
Given the fact that low-cost carriers tend to offer like rock-bottom fares, it could be the impact could be much higher on Ryanair versus British Airways or others who have much higher fares. And so this is a £2 per passenger on short-haul fares, and that can potentially put off someone who is looking to buy tickets for a family of 3 or 4.
30 seconds. Are Boeing workers going back to work tomorrow?
That's the billion-dollar question. I mean, everyone wants to know what happens next.
Yeah.
The unions recommended the workers take the deal because of the fact that they said that there may be a worse deal at the end of this. So they asked the workers to take it 38%. So let's see what happens tonight.
Okay, Sid, we'll watch. We'll have that result kind of first thing tomorrow morning. We'll be able to price that in as well. Plenty more coming up. European equities kind of marking time at the moment ahead of the US election.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
it's on large energy companies. And the question is, are you willing to surrender some of this control to European firms, which are going to be more productive, but you are going to have less control at the national level?
The top names in business are on Bloomberg.
A lot of things we've done which I think are bad, whether you're Democrat or Republican, or you support, it's often done in the name of good, have hurt the lower 20%. They're dying younger, their incomes didn't go up for 20 years. They're the ones who have more crime-ridden neighborhoods, their schools don't work. I think we have to be very clear-headed about how we can accomplish what we want to accomplish to lift up all of America.
Nobody covers business like Bloomberg. Context changes everything. November 5th, election night is here. Trust Bloomberg for up-to-the-minute results as the races for the White House and Congress are decided, as well as detailed analysis of what it all means for the economy, markets, geopolitics, and more. Tune in at 5 p.m. Eastern for an extended balance of power leading into full team coverage at 7, live from the battleground states and Harris and Trump HQ. It's election night on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is the opening trade. We're about 30 minutes into today's session. Seeing some green on the screen when it comes to the equity market. Also seeing green on the screen when it comes to the commodity space. And this is interesting here. We're, of course, digesting two very different lines of news over the weekend. The idea that Iran has now formally said that it is going to talk about a more complex attack on Israel. That, of course, boosting prices, in addition to the fact that OPEC Plus has said they are not going to be increasing their production, at least in the near term. So we're keeping an eye on that. Both of that creating a little bit of a tailwind into the oil story. Brent crude at just shy of a 75 handle. NYMEX just shy of a 72 handle there. I want to take a deeper look into energy policy, this time through the lens of the upcoming U.S. election. How could the potential policy pivots from Kamala Harris or Donald Trump impact Europe as part of a broader series that we're doing, of course. We're joined now by Anne-Sophie Corbeau, global research scholar at the Columbia Center on Global Energy Policy and former head of gas analysis over at BP. Anne-Sophie, a pleasure to have you on the program. Thank you so much for joining us. Let's start with the oil story here, and then I want to get your views on natural gas as well. We are talking a lot about oil in particular, and some of the moves that we're seeing in this market really being cushioned by the fact that so much of the excess supply in this market is being provided by the United States, which has now grown to become the #1 producer of the world, or exporter of the world as well. Talk to us a little bit about how that may or may not continue under a new president.
I think, in fact, this is very interesting because oil and gas are going to be mostly shaped by market forces. And I don't think whether this is Mr. Trump or Mrs. Harris who is becoming president is going to have a major impact on oil and gas supply. It may be different indeed when we are talking about U.S. demand for oil and U.S. demand for natural gas, because Mrs. Harris may have a more strict environmental policy, which would lead to a decline in U.S. oil demand and U.S. gas demand eventually. But in terms of supply, I don't think there is going to be that much of a difference, maybe with one exception, which is on methane emission, where I do expect Mrs. Harris to be a little bit more strict because, you know, the U.S. has entered into the global methane pledge in 2021, and this is very much something that Mrs. Harris is seen as continuing. But when we are looking at the situation in the Middle East right now, I mean, things are evolving very rapidly. So whoever is going to be president may have a totally different situation in January when they are entering into office. And this is very important to keep in mind. 2 months is a very long time in geopolitics.
It absolutely is. And Anne-Sophie, we're going to talk a little bit more about the geopolitics in just a moment, but I want to really zero in on that point you made about the nat gas story, simply because you made a key point that Kamala Harris, candidate Harris, may actually be following in line with some of the policies of Joe Biden, but that does include some of the concerns around pipelines, fracking, and of course the exports to Europe. And that's where a lot of my interest lies when it comes to a European audience, Anne-Sophie, this idea that so much of the export picture of the United States produced LNG in the last 2 years since the onset of the war in Ukraine has been well received by Europe in the absence of getting that supply from Russia. And I'm curious, does that continue if some of Biden's policies are continued under Harris?
Okay, so let's put things back in context. The US is currently the largest LNG exporter, ahead of Qatar and Australia. It is going to remain so, and it is actually going to double LNG exports based on the facilities which are currently under construction. This is a fact. This is happening right now. Plaquemine, for example, in the United States, this is a new LNG facility, is starting. At the end of the year, we are going to have Corpus Christi. Golden Pass is potentially delayed to 2026, but we have a lot of LNG which is coming to the market. This is a fact. Now, what Mr. Biden has done, and which is referred as the LNG pause, is basically saying any additional project which is currently being reviewed by the Department of Energy, we stop because we need to do a full reassessment. Actually, I am pretty much in agreement with the fact that the Department of Energy needed to do a reassessment, especially on what is going to be the impact of this huge amount of LNG export on the domestic gas market, because the last thing that we want is to have US domestic gas prices rising, and I think this is also something that a US president wouldn't want to see happening. Also, we have a totally new framework with the fact that we have new regulation in terms of methane here in Europe, which is also going to be relevant for US LNG exports. So was the Department of Energy right in terms of doing this pause? Yes. Was it correct to make that as a big political statement and use that for the forthcoming elections? Probably not. But make no mistake, there is a lot of LNG which is coming to the market, not only from the US, but also from Qatar and from a lot of additional countries. By my calculation, we have about slightly less than 300 billion cubic meters of LNG capacity, which is coming to the market between 2024 and 2030. This is unprecedented. Now, whether US LNG comes to Europe, this depends on the prices. Because what happened in 2022 was economics 101. Prices were high, LNG came to Europe.
Okay. It sounds like what you're suggesting is that it's going to become a buyer's market within the gas space, which will be very good news for Europe. We now have, obviously, the gasification plants in place, maybe to actually take advantage of it. Is the US going to be a reliable partner, though, when it comes to gas supply? The Trump administration, where it's come into play, will be using all levers at its disposal, maybe to get the policy it wants to see out of Europe. Is gas going to be part of the mix?
Potentially, yes, but do remember that a lot of LNG is actually contracted by a lot of companies. They can be from Europe, they can be from Asia, they can be international companies. So this LNG is simply off-taken at the exit of the LNG plant, and then the off-takers are totally free to send it wherever they want. So again, this is economics 101. If the prices in Europe are indeed higher, then of course LNG off-takers are going to send it to Europe. If the prices are higher in Asia, then they are going to send it to Asia. So the beauty of the US LNG is indeed this flexibility. Actually, if I want to go back to history, when the US and the European Commission had this agreement that a lot of LNG would be sent to Europe in order to help the European Commission and the European Union because of the drop in Russian gas supplies, then actually it was just realizing that, yes, the LNG will go there, but the president doesn't have any power to dictate where LNG cargoes will go. It's not in his power. The power of the administration is to give the authorization or not to send to send the LNG to non-free trade agreement countries, and all European countries are free trade agreement countries. The only thing which may be controversial in Trump's point of view are the methane rules. I don't think he's going to be very happy with that. And indeed, that may be a problem eventually for Europe, but that will be after a Trump administration, because if Mr. Trump is saying don't care about methane, then there is no way that the US LNG is going to be ready in time for when the new rules are really kicking in 2027, and then especially in 2030. But that would be actually detrimental for US LNG exporters.
Yes. So, Anne-Sophie, you sound quite convinced that a Trump administration will not use LNG supplies as a tool of foreign policy. Is that's your advice to Europe?
Yes and no, because at the same time, I think Europe will be under pressure to sign long-term agreements. Now, in 2022, because I am from the Columbia University, but I am also based in Europe, I was receiving a lot of calls from people who wanted to build new US LNG export terminals and were wondering, why are European users not signing some long-term contracts with US LNG plants? And the truth is, European off-takers, they are very hesitant because of the net zero commitments in Europe. And this is something that Trump doesn't like. I mean, he doesn't like, climate commitments. He doesn't like climate change because he thinks this is a hoax. So I think he would be putting pressure on individual countries, as he did during his previous presidency. Why don't you sign long-term contracts with the new projects that we are going to basically authorize? There are a lot of US LNG projects which are waiting for commercial agreements in order to take FID, and it would probably put individual pressure, probably on Germany, but also maybe on some countries in Eastern Europe, etc.
Okay, so that sounds quite transactional, something that maybe we've seen in the past exactly. And might see again. Talk to us about the policy, the big picture policy around climate change, Anne-Sophie, and what you would expect a Trump administration to mean for that, because some people have pointed to the Inflation Reduction Act and the subsidies that are available to cleaner energy and said, well, actually, these are having a big positive impact in some red states, and as a result, Trump won't roll those back. Would that be your assumption?
Yes, partially. I agree that, well, first of all, maybe to put something in context, there is a presidential election and there is also what is happening with the Congress. A president is limited by who is in power at the Congress. If the Republicans are in power at the Congress, and on top of that we have Trump as a president, then he has much more power than if we have a divided Congress, for example. In terms of the Inflation Reduction Act, which is a law, it will be very difficult to repeal if he doesn't have control of the Congress. But also, as you mentioned, a lot of what Biden has done is actually benefiting some red states. So some senators have said very clearly, well, we don't want that to disappear because this is actually helping us a lot. So I think there will be probably some, it will make more difficult to spend what has not been spent yet. It will make, some consumer tax credit, maybe on EVs especially, more difficult to get. Yeah. There is also the hydrogen tax credits, which have to be finalized at the end of the year. We have been waiting for them already for more than 1 year. And I think in terms of everything which is about capture, carbon capture and storage, that will remain because Democrats are in favor, but the Republicans are as well, and the oil and gas industry is very much in favor of that. However, everything which is about 45V, which is benefiting renewable hydrogen, well, we may see some strange rules at the end of the year in terms of a Trump presidency.
Well, Anne-Sophie, a final question to you then when it comes to some of the other pieces of legislation that the Biden administration has put forward. I really want to come back to the nat gas pipeline story because this has been a major point of contention in the state of New York, for example, specifically around that pipeline infrastructure that's going to get built and then potentially help the United States export even more nat gas than they could. But those permits, as you rightly point out, have been paused. And I'm curious how much of that, if Kamala Harris is elected to the Oval Office, stays in play.
My thinking around the additional LNG export is that she is going to authorize, but potentially with strings attached. You have to go back 1 year ago, and what actually led to the pause was this report, which was preprint at that point, from Mr. Howard, that, US LNG is actually worse than coal. And this was a red light for a Biden administration, for a Democrat administration, because until now, the thinking had been that US LNG was actually beneficial for the climate because it was displacing coal. So that report, because of the methane emission, was suddenly changing the whole picture. And when I'm saying strings attached, I think that there would be potentially more constraints in terms of the methane emission. So yes, you can export LNG, but the gas has to be cleaner, and on top of that, your facility has to be also lower emission. And we are seeing that already happening. When you are looking at some of the projects, some of them are planning to use cleaner electricity, others are planning to use CCS at the liquefaction, and some people are also starting to talk about certified natural gas.
Anne-Sophie, thank you very much for joining us. Good to get your perspective. Anne-Sophie Corbeau, Global Research Scholar at the Columbia Centre on Global Energy Policy. We thank you for your time. 8:44 here in London. Coming up, with the US-China trade war still in full swing, who would Beijing prefer to be in the White House? More on that next. We'll leave you with a reminder of what both Trump and Harris have had to say on trade relations between the two.
Tariff. 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 I am a tariff man. To me, the most beautiful word in the dictionary is tariff.
The Trump administration resulted in a trade deficit, one of the highest we've ever seen in the history of America. He invited trade wars.
I want to cut taxes on Americans while putting tariffs on China and foreign countries.
Focusing on relationships with our allies, focusing on investing in American-based technology.
Build your plant in the United States and you don't have any tariffs.
To succeed in Wall Street, what skills do you need? You need to be somebody that claws people on the back, people that you have to be tough, you have to be fighting people all the time. What are the skills that really take to succeed in Wall Street?
Great question. Of course, you have to work hard. So I can tell you what I found for me, and it's probably counterintuitive. I had to stick out. Which is interesting because I made the decision earlier. Being really the only woman, I already stuck out, and I thought I might as well double down on that. I can't hide. So how did I do that? It was by being a contrarian. And I refused as a research analyst to ever publish research reports that said me too. That said, oh, IBM reported earnings. They came in 2 cents ahead. One of the pennies was currency. The other penny was lower G&A, blah, blah. Forget it. Big calls on big stocks. My very first piece of research I published was very negative. At a time, nobody did it. I stood the heck out. And when I was right, that elevated me. And David, I've done that as a research analyst, but I did it in business as well. Here's a business strategy. If everything's fine, just keep your head down and execute. Every once in a while, you have a big insight, and you can build an entire business, in fact, an entire industry around it.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Tuesday, election night is is here. Trust Bloomberg for up-to-the-minute results as the races for the White House and Congress are decided, as well as detailed analysis of what it all means for the economy, markets, geopolitics, and more. Tune in at 5 p.m. Eastern for an extended Balance of Power leading into full team coverage at 7, live from the Battleground States and Harris and Trump HQ. It's election night on Bloomberg. Context changes everything.
Welcome back to the opening trade, 48 minutes into the session, around just over 24 hours until the start of the US election process. I know it's been underway. People have been voting beforehand via the postal votes, but in-person voting kicks off kind of this time tomorrow, in a few hours' time. It's going to be an exciting 24, 48 hours. US markets are barely budging at the moment. European markets barely budging. The FTSE's outperforming a little bit right now. Shell, Astra, and HSBC plus BP doing the heavy lifting. China relations obviously are going to be pivotal in all of this. Relations between China and the United States have faced multiple challenges in recent years. Both the Republicans and the Democrats, though, are signaling that they are going to take a tough stance towards Beijing. Our chief North Asia correspondent, Stephen Engel, looks at how the US election is being viewed in China's corridors of power.
While Beijing likely isn't enamored with either Donald Trump or Kamala Harris, and Chinese leaders are not showing their hand, it would be overly simplified to assume China would prefer, say, continuity over unpredictability. Like the entire U.S.-China relationship, it's far more complex than that.
I think from a Beijing standpoint, they would prefer Trump as president than the Democratic candidate, because the track record shows that Donald Trump is not as anti-China as he's perceived to be.
And yet, Trump has made it clear that he would continue to take a hardline approach on trade with China, threatening sizable tariff increases on all Chinese imports.
I'm telling you, outside of love and religion, it's the most beautiful word there is, tariff.
Now, he has this crazy notion that putting a tariff of 60% on every single product imported from China is a good idea. Let me just tell you, this man has so little understanding of tariffs, he thinks that China pays for them.
Inflation, no doubt, is on the mind of U.S. voters, and Harris has blasted the former president's tariff plans as a Trump sales tax. And yet, the current Biden administration has maintained Trump-era tariffs on some $350 billion worth of Chinese goods, and even added billions more on other Chinese products, including electric vehicles. Perhaps by design not to antagonize American workers in manufacturing swing states, Harris has been less specific on what her trade priorities would be, repeating that America must protect and build its competitive edge over China in critical sectors like advanced computing and semiconductors.
The third pillar of our opportunity economy is leading the world in the industries of the future and making sure America, not China, wins the competition for the 21st century.
There was a narrative that I think that was prevailing when this administration took office, that the United States was sort of on the verge of being surpassed by China as an economic power, that the United States' influence was waning in the world, that China's influence was on the rise.
And that's where geopolitical differences between China and the U.S. also hang in the balance. No one knows for sure how either candidate will deal with contentious issues like Taiwan, the South China Sea, Ukraine, and the Middle East. Not to mention trade policies based on national security concerns.
If Kamala Harris comes in, I'm sure it's going to be status quo, and we'll have the continuation of the current policy, which is driven by the national security lobby. To me, this is the policy that hurts China the most.
Or does it? China's not saying.
We have repeatedly stated that we do not comment on the U.S. elections and oppose any U.S. individuals making an issue of China during the elections.
At some point, we know China will inevitably take a stand, regardless of who's in the White House. Stephen Engel, Bloomberg News.
Okay. It's going to be an interesting few days for China. It's going to be watching what is happening with the election. It is also going to be watching as well what is going to be happening with the NPC.
Yeah.
Which of those two factors are going to have a bigger impact on Chinese markets?
Yes,
I wonder.
in the short and in the long term, we asked that question. Really interesting, though, the analysis there from Stephen Engel, and sort of taking us back a little to the conversation we had around energy markets, that it's sometimes difficult to assess what Trump will be like in reality on any particular policy platform, because you have to separate some of the rhetoric from the transactional nature of the politics and the way it plays out, or it has played out previously.
Yeah, and I think it's also fascinating that that package made a really key point that also our energy guest made as well, which is that policy might not actually change at all. So the status quo, which has already been an increased tariff picture, it may just be the status quo. How much more tariffs can you really add without congressional approval?
We don't know what the makeup of Congress is going to look like. We don't know what the White House is going to look like. We don't know at this point. And China doesn't know either. It can make calculations. But the other factors that are all in the mix here are what is happening with Ukraine, what is happening with North Korean troops, what impact is China having on that, how is that going to affect relations with you? And there's so many other complicating factors in the mix here. The US election is just one other wild card.
Absolutely, and we will see how investors globally play all of those angles then on the election, as Kamala Harris and Donald Trump make their final case to voters. The finance industry is gaming out the implications of a historically close race that could dramatically swing policy. Many trading desks are being staffed through the night. Joining us now to discuss Bloomberg's markets reporter Valerie Titel with details. So how have investors been preparing then, Val? We've talked about this for a while. Some investors today saying they're trying to pare back exposure to the extent that's possible.
Look, for many funds out there, this has been a weeks-long, maybe months-long preparation of preparing models, just how the market reaction could be, and even running simulations with political consultants on, at what point could we get a big swing towards Harris and then a big swing back to Trump? Because that may be, for many out there, those dislocations may be where the value lies. Even some traders saying they're not really watching the presidential race. They're more focused on Congress, and their trading book is more attuned to swings Congress with the Republican sweep versus a divided Congress. But even if funds aren't positioned for an outcome, they're very much gearing to trade it, because remember, we could get a lot of information out during Asia markets, and Asia markets are known not to pick up on all the nuances of the U.S. political story. So there could be a lot of opportunity to put in trades if traders out there are nimble and they're getting ready for that kind of game plan.
How well staffed will the U.S. desks be?
A good point. We've been hearing from many saying that they prepare to do all-nighters, even some traders talking about how they're going to be taking cat naps on couches. JP Morgan plans to increase staffing in Europe and Asia in case there is a big surge in volume, and the U.S. desks need to be supported in other areas. Goldman is said to have hundreds of sales and trading teams on site in New York throughout the night. There's even one major central bank, or one major investment bank, saying that they're halting any technology updates during this week because they don't want any trading glitches happening during these volatile sessions.
It's going to be a really fascinating one, and also where are those glitches potentially happening in the currency market, the bond market. Remember what did take several, I think, current kind of limit up, limit downs when it comes to stock market trading the day after the election. At least that was the case in 2020. We're going to keep an eye on that, plus all the slew of earnings this week, and of course central bank decisions around the world. All of that is going to be covered throughout the week, but of course the U.S. election is going to be front of mind across the markets and across the policy. I'm sure plenty of European nations, government officials and investors alike, paying attention to it. Of course, it's European stocks pairing those early gains. That does it for the opening trade. This is Bloomberg.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record,
and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week.
More than what you need to know, it's what you need to think about.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. DraftKings has become a top performer in the booming U.S. sports betting industry. CFO Alan Ellingson knows the company must stay focused on change and innovation to succeed.
We're in an evolving business. We're constantly evolving and tweaking our expectations for how things should be performing. We're constantly looking at things in different ways.
Watch Chief Future Officer, only on Bloomberg.
With just one day until the U.S. election, polls signal a close race as the two candidates rally last-minute support in the battleground states. Now, dollar falls the most since late August, while Treasury yields drop as some investors pair the so-called Trump trades. Plus, oil rises after OPEC Plus members agreed to delay a production hike, as Iran is also reporting to be planning a strong and complex counterattack on Israel. So, happy election week. It's a big one show in town this week. I know there's a Fed, I know there's a BOE, but actually it's all about the U.S. election. So let's take a look at the European markets map. Now, we have seen a little bit of readjusting, certainly, to that Trump trade. Again, the dollar actually falling. So we look at some of the companies that are most sensitive to dollar strength or weakness in the U.S. You can see for the moment the FTSE gaining some 0.5%. The DAX are down, and then everything else is in a little bit of a wait-and-see situation. Now, the dollar falling, again, walking back on some of the bets that Donald Trump wins the U.S. presidential election after weekend polls seem to be suggesting. They're volatile, and it's a very close margin that Kamala Harris is doing better in certain swing states. We do have a couple of other things that we watch out for. The 10-year Treasury yield 4.3029, euro dollar 108.94, and then Brent crude. There's a lot going on in the Middle East as well. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the dollar slipping with polls giving no clear indication of who will win the U.S. election tomorrow. Now, this comes as investors are pairing so-called Trump trade. To talk about the markets and the U.S. election, we're joined by Eric Nielsen, Group Chief Economics Advisor at UBS, and Ross Matheson, Bloomberg's EMEA News Director. So thank you both for joining us. Ross, when you look at some of the latest polls, I mean, there's a slight advantage for Kamala Harris, but actually it could be very thin margin and anything could happen, really.
It is still very, very close. I mean, there was one poll which looks to be a bit of an outlier, showing some gains by Harris in Iowa, which would be very interesting, obviously, given the history there with the Democrats in Iowa. But overall, the polls are still pointing to something that's incredibly close within the margin of error. So they're essentially neck and neck going into Election Day. And with a reminder that quite a few people have voted already. We've seen a lot of pre-voting that's occurred. So many people people have locked in their votes already, well before polling day. So it'll be interesting to see how that plays out just in the final 24 hours. But either way, incredibly close. And what is the thing that's going to shift the needle on election day? Are people just being coy about who they want to vote for? Have they decided? Will they decide in the minute? And what's the thing they're going to vote on? Is it personality or is it policy?
Yeah, and Roz, I guess the million-dollar question is actually this could be very contested. We could see people in the street. We could have, no real certainty for the next 40 days.
Well, that's right. So if it's a big win, say, for Kamala Harris, you can imagine that Donald Trump will say that was caused by the vote being rigged. If it's very close, he'll say similar. And you can see the narrative that's coming already on the Republican side, which is pushing these polls that show Donald Trump well in front. And the idea is that he's got a significant lead, that he is the preferred president at this point in time, and that helps shape the narrative for after the election. If he were to lose the vote in the end to Kamala Harris, is to say, see, hang on, he was in front before, suddenly he lost the election, something's gone wrong here. And that sets us up for quite a period, potentially, of contest, illegally, otherwise, in the courts, elsewhere. Who knows what's going to happen? And that's what makes this election, again, so uncertain.
Okay, and Eric, I misspoke. You're of course, advisor to the other red bank, UniCredit, not UBS. When you look at, how markets are positioning themselves, they're unwinding at the margin a little bit of a Trump win, but it's impossible to say, really.
Yeah, it feels that way. I think exactly as you said before, when we were in Washington at the IMF meetings, I was surprised that somehow markets persuaded itself that Trump was well ahead. And as you said, there was no indication that this was true. So I think what is seeing now is a little bit of that sort of realization that, we got ahead of ourselves, and you're sort of getting nervous about it. So she said, we don't know. Nobody knows today, I think, you can say. So, but the market had priced itself suddenly as it was a quite clear victory for Trump, which seems crazy.
But Eric, also no one really knows what a Trump presidency second time around could mean for the world economy, or do we?
Oh, we do. Very bad. Very
extra
bad.
Inflation, tariffs.
This idea that he sort of walks away from his pledges of tariffs, for example, and this sort of, it is an illusion, right? It's wishful thinking. We saw it before. He's been saying it again and again. Maggie Haberman at the New York Times, who have followed him more than anybody, has said this is crazy. And you can start with what we also saw, which is G7 in a world now that is so fragmented, where G7 is the one sort of a body where liberal democracies can work together. It was basically dysfunctional last time. It will be again. So very, very troublesome if he wins.
Rosin, you were alluding to the fact that actually we don't really know what the voters are voting on. It's the economy. The economy is good, but they don't feel it in their pockets. What's been the most surprising thing in this campaign so far? There's been many celebrity endorsements.
Well, that's right, but the celebrity endorsements have been pulling the voters in who already know who they want to vote for, in a way. Elon Musk, that's very much speaking to the respective choir in the Trump camp. Some of the celebrity endorsements that have come for Kamala Harris, it's who gets the ones in the middle. It's almost like two chickens and a bunch of feed in the middle, and the feed is the thing you really need, right? And who's going to get that? In a way, I shouldn't be surprised, but I am surprised by the lack of policy in this election, just how much it has become about personality and individual personality. And again, the question of, what are you if you're a Democrat anymore? What are you if you're a Republican anymore? What's the identity in all of that? It's simply about the personalities of the two people who are contesting this election, and not alone around policy. And that's maybe why voters are really waiting to the last minute or undecided, because if you're a voter in the end, what are you going to vote for? It's the economy and how you're going to feel in your own family, your own job, your own security, your income, and so on. And if you don't know that, you don't know, again, domestically, at least economically speaking, what does a Trump presidency mean for you? What does a Kamala Harris presidency mean for you? And you don't understand where they lie on policy domestically, it's really hard to choose. And so I find it quite surprising. It's all just about the power of their personality.
But Roz, what I hear more and more, or at least for certain people on the Republican side, is I wish I could vote for someone with Kamala Harris's personality, but Donald Trump's policies. So would he even be good for business?
Well, it's interesting. We saw this at the FII, a conference that we were involved in Saudi Arabia last week. A lot of the big banking CEOs, finance chiefs who were speaking there were saying they believe that Donald Trump would be good for the economy and good for business particularly, like get out of the way, allow business to crack on and do what it needs to do. And so a sense that economically they do see him as being better for their business than Kamala Harris. But again, what you don't want to have potentially is Donald Trump's erratic behaviour when it comes to foreign policy, in particular, just deciding one day to pick a fight with China, the next day pick a fight with another country and then change his mind the day after about that fight. So it's very difficult from a global perspective to operate with the US president who changes his mind every 5 minutes. So perhaps you want the coherence, maybe the kind of pragmatism of Kamala Harris, but there does seem to be some popularity around his policies for business.
Eric, I mean, you said Donald Trump is bad for all economies, but actually, does Europe have more to lose than the domestic economy, or even than China?
Yeah, I mean, it's so let me start by saying I take a little bit sharper view on this. I mean, I think it is businesses can believe whatever they want. Deregulation is not number one issue in America. I mean, every business like deregulation. A lot of it is environmental stuff. Do we really want to deregulate a lot of the environmental legislation in America? I have my reservations on this one. And in terms of tax cuts, there is no economic evidence that you get a big boost for the type of tax cuts that he talks about. And tariffs we have talked about, we know it's bad for growth for America, for American consumers, right? And then we haven't even talked about what would Europe do, what would China do if or when he does his tax increases. The idea that he sort of comes out and we all call him up from Europe or China and say, oh, you know what, let's make a deal. We buy a lot of whatever, Tesla cars made in America. It's an illusion, right? We have never seen this type of policy approach without the other side doing something similar. It's so the risk of a trade war and this kind of an accelerating kind of a nationalization of policies increases significantly. So I'm deeply frustrated with the titans of American industry and finance who say it doesn't matter. How in the world can they have this conclusion? I have my suspicion, but I mean, papers have written about this, but it's not real.
Eric, point taken. We'll get back to that a little bit, in a little short while. Eric Nielsen from UniCredit, Ross Madsen, Bloomberg's EMEA News Director. Now, coming up, we take a look at what the outcome of the U.S. election could mean for Europe's economy, and we delve into a little bit more what Eric was saying. That's next, and this is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Weekdays at 9 a.m. Eastern, only on Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. The top names in business are on Bloomberg.
A lot of things we've done which I think are bad, whether you're Democrat or Republican or you support, it's often done in the name of good, have hurt the lower 20%. They're dying younger, their income didn't go up for 20 years. They're the ones who have more crime-ridden neighborhoods, their schools don't work. I think we have to be very clear-headed about how we can accomplish what we want to accomplish to lift up all of America.
Nobody covers business like Bloomberg. Context changes everything. Thursday, the Fed decides.
Is this a Fed just dealing with debt and deficit?
It's about the election. It's about the Fed, especially at a time where you have those yields creeping higher.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
We now see the risks to achieving our employment and inflation goals as roughly in balance.
We've got a statement, a decision, and a news conference.
Tune in to Bloomberg Surveillance, the Fed decides, starting at 1:30 p.m. Eastern.
Welcome back, everybody. Now let's take a closer look at how the U.S. election is being viewed here in Europe. Still with us, Eric Nielsen, Group Chief Economics Advisor at UniCredit. Eric, thank you so much for sticking around. When you look at some of the concerns or the question marks that many European leaders have over Donald Trump, is there any way of Trump-proofing the European economy now?
No. I mean, it's... Europe is in a difficult space already, and not only because of America, but because the model of exports doesn't work in this post-globalization world. So in Europe, we have to get domestic demand going, right? So that's the beginning of it. But getting somebody in the U.S., if Trump, God forbid, becomes president and does tariffs, which I'm convinced that he will at least try to do or begin to do, is bad for Europe, right? I mean, it just makes our life more complicated. I mean, the optimists say that is the spark that won't get Europe to get its act together, right?
But led by whom? I mean, this is a question.
That's right.
Olaf Scholz is very weak, and I don't know whether he'll last for that much longer, and whether that's linked to the economy.
That's right.
But also, it's the same in France and other major countries.
Yeah, I think that's right, exactly. So it's too optimistic to believe right now. I mean, we have a new commission and a good commission as far as I can judge, but sort of big steps forward for Europe always starts with Germany and France. And we have weak leadership both places. So it feels unfortunately too optimistic to hope that a lot will happen. There'll be something on the sides, but it's difficult.
What, Eric, do you think needs to happen in Europe for this catalyst? I mean, if we see, for example, the coalition in Germany not surviving, does that have wider implications for the bloc?
Yeah, I mean, and there are certainly a lot of rumors now after Friday's surprise by Finance Minister Lindner. So maybe we get elections in March or they're about 6 months earlier than otherwise. And if the opinion polls are broadly right, you get Merz as the next chancellor, most likely, according to the opinion polls. We don't know exactly what he stands for on this, but generally speaking, I think it's realistic to think about progress on the internal market, capital markets union, banking union, sort of thing. The stuff that is not strictly budgetary, right? They're worried about the budget, too worried in Germany about the budget, and get that wrong, in my opinion. But the private sector can do a lot. And deregulation in Europe would be a very good thing. And I think that shift in German politics, according to the opinion polls, would go in that direction, and Macron would follow, and the government would almost certainly follow. So there are areas where we could see progress.
I mean, do you see what's the right way of dealing with China, given still the need of having such a large partner, but having to be very careful about what kind of partner they are?
Yeah, like most economists, I'm a strong believer in free markets and not industrial policies and all the rest of it. The reality is that China has been subsidizing through various ways tremendously, sort of about 10 key industries. The EV is your perfect, but solar panels, you have it across the board. And I think there is a time when you have to say we cannot see our industries closed down and be giving away. So I think I would hope that one doesn't go down too far the tariffs route. But if that's sort of what has to be done, in that space, I think there is no choice, even though I really dislike it. I would have hoped that one could sit down with the Chinese and talk about it. But again, we know what the Chinese problem is. It is lack of demand, domestic demand. Yeah. This is the issue. And they are in a very serious bind because of deflation. This is the pushing on the string is what they've been doing on the monetary policy side. this is not going to resolve the deflation problem. And it's a very indebted economy, so it's very dangerous, right? So hopefully somebody can explain to them. Actually, I'm sure that the Chinese economic leadership understands. The question is probably the top, where everything has to be signed off, I suspect, but I'm not a China expert.
Eric, I mean, the other thing is that we're seeing like a big trend in European countries and the UK of taxes rising. I mean, is this just a consequence? You have high level of debt, but this is also a consequence of the high spending that happened in COVID. Yeah. Is this just the way that most European countries will have to go? Yeah, I think we have to accept it. I mean, and you mentioned the UK. I mean, last week's budget here, I don't share the wide criticism of the government's tax hikes. This country is about 7-8 percentage points of GDP below, say, Germany in terms of taxation of the overall economy. And the Brits demand the same type of public services, of education, healthcare, pensions, defense, and whatever. How will they fund it? But in addition, we have the climate change, we have the need for further defense and other things. And I think the reality is that Europe, we will have to pay higher taxes or a bigger tax base. I mean, this is a complex issue. But to think that we can find efficiency gains only, or we can borrow all the money, it's not realistic. So we are going in that direction. Will the UK plan lead to higher growth? I mean, if you have growth, it just makes everything better, of course.
Yeah, I think it will. I mean, I think it's in investments. I mean, if you're investing in the NHS, the healthcare system here, and you can shorten the waiting list, and you can get people back to work to a large extent. The number of people out of work because of long-term sickness in this country is huge, right? So fundamentally, good public investment will enhance long-term growth. I mean, that is economics 101. Now, how you implement it and the reforms that's needed and stuff is also important, and we don't really know what they do there yet. But without the money, I don't believe you can do it.
Eric, thank you so much, as always, for joining us. Eric Nielsen, Group Chief Economics Advisor at UniCredit. Coming up, oil prices rise after OPEC Plus delays an output hike and Iran ramps up its rhetoric. More on this next, and this is Bloomberg.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
earnings now crossing the wire.
Bank of America, the retailer Five Below.
There is something for everybody.
With the smartest insights.
Weaker inflation is not great for earnings.
I think the consumer's a bit more resilient.
You've had earnings recessions flow through growth and then cyclicals and defensives.
Earnings cycle continues on Wall Street.
Continuing coverage on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg.
Advanced after OPEC Plus agreed to push back its December production increase by 1 month, and tensions escalated again in the Middle East. Now, for more, Bloomberg's Jumana Bersace joins us from the world's largest energy event, ADIPEC, in Abu Dhabi. Jumana, good morning. So what else did we learn from the OPEC Plus decision?
Yeah, well, it's a good place to be at the largest energy conference on the back of this decision out of OPEC Plus. It was taken late last night, Francine, and there had been lots of questions as to whether or not they were going to go ahead with this projected increase of production in December. They were due to put back 180,000 barrels per day, but it turns out they've decided to postpone that decision just by 1 month, perhaps buying a little bit more time. So what we're seeing this morning is a bit of support coming through to the oil market, but again, the longer-term questions that have been surrounding OPEC Plus decision-making are still there. We talk about some of the demand concerns. I heard your conversation just now with Eric Nielsen talking about the deflationary pressures coming through from China. In addition, you have to think about the big increase in non-OPEC Plus supply and the fact that U.S. production has continued to go up even under a Biden administration. One of the big themes here, of course, is what happens post-U.S. elections with that oil production coming out of the U.S. and not just U.S., further supply coming from the likes of Brazil, Guyana as well. So these are longer-term questions that OPEC Plus have to grapple with. In the short term, though, we are seeing a bit of support. Plus, add to that some of the geopolitical considerations with Iran over the weekend, saying that they may also have to respond to the Israel attack on their infrastructure from a week ago.
So, Jumana, what else are we hearing from ADIPEC?
So big themes, and you know what, Francine, you're not going to be surprised to hear this, but AI has also come up as a big theme this year at ADIPEC. Some of the other major topics have been about the growth of energy demands coming out of the global south, emerging market economies, the transformation of the energy grid with the big transformation that's going on in wind and solar energy. But AI has been a dominant theme, and I just want to pick up on some of the comments given by Dr. Sultan Al-Jaber, who is the managing director and CEO of ADNOC this morning, and he was saying over the next 6 years, data centers will more than double, requiring at least 150 gigawatts of installed capacity by 2030, and even double that again by 2040. And so you have all of the biggest industry leaders from around the world, policymakers as well, thinking about the outlook for the energy complex looking ahead. And yes, we can talk about short-term hydrocarbon drivers, but more medium-term, long-term, there is a huge energy demand shock coming, and that is in the form of population growth, but also this explosion in data centers as well that is going to really ask for a lot of energy. Where the energy source is going to come from is a big question for the next decade.
Jumana, thanks so much. Jumana Bersace there at ADIPEC. Coming up, our interview with former British ambassador to the U.S., Nigel Sheinfeld, on the eve of the U.S. election. That's coming up shortly, and this is Bloomberg.
clientele.
Yeah, power women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that is empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful woman's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week.
More than what you need to know, it's what you need to think about. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Good morning, everyone, and welcome to The Pulse. I'm France Lacqua here in London. These are your top stories. With just one day until the U.S. election, polls signal a close race as the two candidates rally last-minute support in the battleground states. Now, the dollar falls the most since late August, while Treasury yields drop as some investors fear the so-called Trump trades. Plus, oil rises after OPEC Plus members agreed to delay a production hike, and as Iran is reported to be planning a strong and complex counterattack on Israel. Now, U.S. Vice President Kamala Harris and former President Donald Trump remain deadlocked in opinion polls ahead of Election Day tomorrow. New surveys have them neck and neck nationally and across the battleground states that will decide the outcome. So let's get more from our Bloomberg senior writer, Stephanie Baker. Stephanie, thank you so much for joining us. When you look at the key takeaways, first, do you believe the polls, and how close are they?
Right. So if you believe all the polls, this is neck and neck, dead heat. There are two theories of the case. One is that the polls are undercounting women voters and how angry they are with the Dobbs abortion decision, and that they're going to come out in record numbers for Harris. The other theory is that actually Republicans are coming out in really strong numbers, that Trump has gotten historic support amongst male voters, increased support amongst black male voters, and that he could win the day. So it's really hard to tell. There has been a lot of discussion that the polls are noisy because there are a lot of right-wing leaning polls in the mix that are relying on faulty data. So it's going to be really hard to tell. I will be looking at Georgia and North Carolina, the first East Coast states to be reporting. There'll be about 16 East Coast states closing at 7 p.m. Eastern time, midnight in London. And Georgia and North Carolina are, they count votes quickly. So I'll be looking at those polls and what they're indicating.
But Stephanie, this could be a very contested election, and it could take, so you're looking for these two swing states to kind of give us an indication, but it could take, I guess, many even weeks to find out who is president.
It really depends on how close this is. Yeah, if it is very close, we could be in for a long haul. Pennsylvania looks very close. There are already lawsuits over some registrations there. So it depends. If it's neck and neck and we're down to a few thousand votes, this could last for quite a while. What's clear is that I think the House race will take a lot longer to settle, as will the Senate. But I think that this could be a quicker result depending on the margin of error.
Stephanie, thank you so much. Stephanie Baker there, our Bloomberg senior writer with the latest on the U.S. Now let's get more on the U.S. election and bring in Nigel Scheinwald, former British ambassador to the U.S. from 2007 until 2012, for the perspective of how foreign countries are looking at this. Ambassador Scheinwald, thank you for joining us. When you look at Europe, when you look at China, who has the most to gain and win from a Trump presidency?
Well, I'm not sure that anyone has a huge amount to gain internationally from the Trump presidency, apart from maybe Russia. I'm sure that Vladimir Putin and Benjamin Netanyahu, perhaps in Israel, would be the two obvious ones who would see a Trump victory as to their personal and national advantage. But I think more generally around the world, perhaps even in China, there'll be concern about a second Trump term because of the uncertainty and because of what he said on the campaign trail about his policies if he comes in. And I think it's very unwise for people to assume that there will be something of the Trump 1 effect of grown-ups in the room reining back some of Trump's instincts, although I don't think that happened as much as people now claim. Nevertheless, it seems unlikely to happen in a second term where we'll have Trump unbound, a more vindictive approach, and packing the administration and maybe jobs in the armed services and elsewhere with people loyal to him, perhaps without the seniority and experience. So I think there's worry and anxiety around the world, particularly probably in Europe, where there's a direct challenge to NATO and a direct challenge to the support which Europeans have given to Ukraine.
President Trump has talked about tariffs even at 1,000%. He talks about borders. Are you most worried about security and what he would mean for NATO, as you mentioned, but especially for Ukraine?
I think that's probably the issue which is most on people's minds is the possible disruption, undermining of NATO. Even if the United States stays in NATO, a United States which is not prepared to support and defend its allies and which is undermining the sovereignty and the independence of Ukraine is going to put it at loggerheads with its European allies, just at the point where the Europeans at last are starting to spend more money in defense, and even in Ukraine, the balance between the US and Europe in terms of military and other assistance is much more 50-50, or maybe even more overall, the Europeans putting in more. So the idea that Europe is still freeloading in the way that perhaps it was decades ago, I don't think is right today. But I think it's a more general thing. I think when you look at British and European positions on the big issues, on the Middle East, on climate, even on handling China, I think that there is just too much of a gap with Trump. We don't know what Harris's policies would in the end turn out to be. She hasn't been a particularly well-known figure internationally in the 4 years of the Biden presidency. That's not to her discredit, but she's been focused elsewhere. So we don't know exactly where it'll be, but it feels as though she would be a more conventionally supportive and internationalist president. I'm sure there will be nuances, for example, on the Middle East, which might bring her actually closer to European positions. But I think Europeans would be happier to have that level of uncertainty with her, generally speaking, than the huge uncertainties and likely divisions and conflicts with the Trump second term.
But, Ambassador, again, it does feel that even under Joe Biden, allies have had to fend more from themselves when it comes to national security, to international matters, and foreign affairs. So is there a fact that no matter who wins actually the White House, the Europe just needs to be stronger, and the UK needs to be stronger?
Absolutely, I agree completely with that. I think it's starting. I think it started after the Russian invasion of Crimea in 2014. It didn't start with Trump. The UK has been advocating for a long time for ourselves and for Europeans to step up our defence spending. And generally speaking, we are. The European Commission. The UK is not any longer part of the European Union, but the European Commission is putting a lot of emphasis on defence in the 5-year term, which it's just just embarking on. So I think that left to its own devices, Europe will continue down a more responsible path. And the question is whether it's given the time to develop its defense and security capabilities over the years ahead, or whether an incoming president precipitates a real crisis, which would endanger the security of the continent, but also give Russia a much stronger hand in dealing with the problems of the day. But I agree completely. I mean, Europe needs to change. The UK needs to continue really seriously on its path of increasing defence expenditure and being very serious on issues of international security. But I think the UK has a reputation for that. I think the problem is more on the European continent at the moment.
So, Ambassador, what's the right way in dealing with China in all of this turmoil? How should Europe look at China in, trying to maybe break away from the U.S. or fully align with the U.S. on what the right way, for example, on tariffs is?
I think that Europe has already moved, just as opinion in the United States on both sides has moved in the last 5 or 10 years to a much more hard-headed position, much more conscious of the national security, technological, commercial threats than perhaps was the case 10, 15 years ago. So I think that is happening. I think that Europe will always want a safety net in the relationship with China, in much the same way as I think the Biden administration is trying to achieve. The sense of avoiding unnecessary crises and conflicts, better understanding each other's bottom lines, seems to me to be an essential accompaniment to a tougher position on trade and technology, which the US has taken and where Europe has overall followed. And I think a UK government, will be a partner for the United States, provided that it doesn't go recklessly into a conflict situation with China. So I think the goalposts have moved. There's been a shift in European as well as in American thinking on China, but we won't want to move to a position of complete confrontation. Nor do I actually think that Trump will. I think that Trump, wants to go hard on the trade side, and our worry on the trade side will be that excessive tariffs will trigger a much wider international trade war, which will be disadvantageous just as much for European and American citizens as it would be for anyone else in the world.
Is there anything that we're underestimating that Donald Trump would be good for Europe?
Well, I think his instinct for deals and for peacemaking can sometimes, could conceivably come off. I don't think it did come off particularly in the first term. The initiative with North Korea did not work out because I think the Trump administration were too naive in their approach there. The Abraham Accords with Israel were potentially very, very valuable and far-reaching, but of course they missed out on the Palestinian track, which has now come to the fore and is indispensable if there's going to be a new alignment in the Middle East, which I'm sure the UK and Europeans would ultimately support. But no, I don't think that there is too much other than believing that he might pull a rabbit out of the hat in terms of a desire for negotiation and a degree of creativity which is needed if you're going to be an effective negotiator.
Thank you so much, Nigel Scheinfeld, there, the former British ambassador to the U.S. Now, coming up, Ryanair cuts its passenger outlook, and it's blaming Boeing. We'll have plenty more on corporate stories. Of course, it's going to be a big week, not only for central banks, but politics with the U.S. election tomorrow. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. DraftKings has become a top performer in the booming U.S. sports betting industry. CFO Alan Ellingson knows the company must stay focused on change and innovation to succeed.
We're in an evolving business. We're constantly evolving and tweaking our expectations for how things should be performing. We're constantly looking at things in different ways.
Watch Chief Future Officer, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Weekdays at 9 a.m. Eastern, only on Bloomberg.
Due to get 11 aircraft in the quarter between September and December. We've received 2 of those. I don't think we'll see any more aircraft this side of January or February. We look like we could be left short 10 aircraft, possibly more, into peak summer.
Well, that was the Ryanair Chief Financial Officer, Neil Sorahan, speaking to us earlier about the impact of Boeing delivery delays. Now, Ryanair is set to cut its passenger growth target for next year. The low-cost airline is blaming Boeing's ongoing strike and production issues. Now, in a moment, we'll also talk Berkshire Hathaway with Charlie Wells. But first, let's get more on Ryanair with Bloomberg's global aviation reporter, Sid Phillips. So thank you both for joining us. Sid, what is Ryanair saying about growth?
So Ryanair is saying that they can't really grow as fast as they expected to grow next summer because essentially they aren't getting enough planes from Boeing. And Boeing's sort of struggling with production because ever since the strike, which is now, hopefully we're going to see a vote on that today, but since the strike, they haven't been able to produce any 737 MAX jets, and that is really crucial to Boeing's growth, to Ryanair's growth plans.
So what are the trends, I guess, on prices?
So pricing has actually been a sore point for Ryanair because last summer was not as strong as Ryanair expected it to be, and they sort of blamed the cost of living and the fact that customers are sort of facing much more pricing pressure, and so they're sort of holding off on bookings. And so we have seen some softening of pricing. Ryanair says that we're sort of that softening is moderating now, and we sort of will see pricing go up as we get along.
Sid, there's been so much Boeing story. We literally come in the newsroom, and the first thing we say is, book Sid, or something with Boeing. What do we know about the vote strike today?
So the unions recommended this vote. It's the third time they're going to vote on a deal. The union said that this deal is the best that they can do. So they recommend that members accept it. There's 33,000 members voting today, and we will know later today about what that resolution will be and whether or not they accept the deal, which is basically offering them 38% increase over 4 years. And they've also offered a $12,000 ratification bonus. And so they're looking to see if that gets accepted and basically get the workforce back in the factories, back producing aircraft, and starting delivering aircraft and generating cash.
So, infrastructure in the U.S. is frankly a big problem, especially when you fly long haul. You kind of, see the difference between some of the European and the Asian airports. Do we know tomorrow's the U.S. election? is there any plan from one candidate to actually change, if not air travel, certainly the infrastructure that supports it?
Air travel hasn't really come up, but they have all the candidates have talked about spending and increasing public spending. So we might see some more. We've already seen massive projects underway in some of the biggest hubs in the U.S. And so like JFK and other places where they are expanding and spending lots of money on modernization of the terminals and everything else. But there still remains things to be done, including modernization of the air traffic control systems and those sort of things that you don't actually see, but those things are crucial for aviation. So it will be interesting to see how the next president decides how to spend money on aviation.
Sid, thanks so much, as always. Sid Phillip there with the very latest, of course, on Ryanair and Boeing. Now, Berkshire Hathaway's cash pile reached a record $320 $25 billion in the third quarter. Now, the conglomerate also cut its stake in Apple again, this time by about a quarter. Now, for more, let's bring in Bloomberg's Charlie Wells. Charlie, thank you for joining us. So when you look at Warren Buffett, he still hasn't anywhere to deploy his cash pile. He's just sitting on it.
I mean,
not literally.
It feels like it. I mean, $325 billion. You could buy most companies with that amount of money, but Berkshire Hathaway isn't even repurchasing their own shares. They didn't do that in the third quarter. They haven't not done that since 2018. And I think this just speaks to Buffett's view of valuations probably being too high, not only of his own company stock, but also in the S&P 500, right? Up 20% this year.
I mean, has he talked about a catalyst for either buying or selling off?
You know, he's patient, right? He talked in May about how, you know, they are happy to sit on the sidelines until they can find an investment that is low risk, but can also make them a lot of money. And I think the thing that differentiates Berkshire Hathaway is that permanent capital. So compared to a lot of other financial firms, they can really just wait this out.
Should we read something into the fact that they can keep on selling also Apple shares?
That was a really grabby point from their third quarter earnings report, that they had reduced their stake in Apple by 25%. And I think, you know, you could see this potentially as, you know, a little bit of caution on behalf of or by Berkshire, given Apple's been slowing down a little bit, particularly in China. But really, you know, their position there had just ballooned over the years. This feels like a trim and also an attempt to probably keep some potential tax hits at bay.
He hasn't talked about the U.S. election, right? He's one of the few billionaires that kind of stayed on the sidelines?
He's stayed on the sidelines. You know, he has previously endorsed candidates, and I think something notable is that he's been quieter this election, and I think that's something that, you know, others have commented on other billionaires, but it seems like he's really kind of trying to stay mum there.
All right, thank you both for joining us. Of course, that was Charlie Wells and Sid Phillip talking about some of the big corporate stories that we're watching out for today. Now, coming up, traders prepare for a long night ahead of tomorrow's U.S. presidential election. We'll preview what investors should look out for. That's next, and this is Bloomberg.
Names in business are on Bloomberg.
A lot of things we've done which I think are bad, whether you're Democrat or Republican, or you support, it's often done in the name of good, have hurt the lower 20%. They're dying younger, their incomes didn't go up for 20 years, they're the ones who have more crime-ridden neighborhoods, their schools don't work. I think we have to be very clear-headed about how we can accomplish what we want to accomplish to lift up all of America.
Nobody covers business like Bloomberg. Context changes everything. Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
November 5th, election night is here. Trust Bloomberg for up-to-the-minute results as the races for the White House and Congress are decided, as well as detailed analysis of what it all means for the economy, markets, geopolitics, and more. Tune in at 5 p.m. Eastern for an extended Balance of Power leading into full team coverage at 7, live from the Battleground States and Harris and Trump HQ. It's election night on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Now, bankers, traders, and investors are bracing themselves to handle overnight volume and volatility after tomorrow's U.S. presidential election. Many trading desks are being staffed through the night. Joining us now to discuss Bloomberg's markets reporter, Valerie Teitel. So, Valerie, it's very clear there was a Trump trade, and now it's being unwound a little bit. And there's a lot of, head scratching and saying, why were the markets so obvious? What does that mean going into the election?
Look, this is a lot of what investors have prepared for. They've built models to try to figure out if on election night, if we swing towards a positivity around a Harris win and then swing back towards positivity around a Trump win, what kind of trade dislocations are we likely to see, and how can we take advantage of that? We heard from many fund managers, last week saying that they were busy running simulations with their political consultants and with their economists on just how the election night could unravel. Some traders actually telling us they're more focused on the congressional districts than the presidential outcomes, thinking there'll be more, trades that they could put on when those dislocations happen. And then there's also funds who have taken chips off the table saying, look, we could get big data about the U.S. election out during the Asia session. And the Asia traders are less attuned to the nuance of the U.S. political story. And maybe if I take some chips off the table now, there's some good trades I could put on if Asia does read it the wrong way. So maybe opportunities out there for traders to be nimble over election night.
Which is why a lot of, New York traders are going to pull all-nighters.
That's right. Yeah, traders in New York going to pull all-nighters. We heard from J.P. Morgan saying they're going to increase staffing in Europe and Asia in order to handle the surge of volatility coming out of New York. Goldman also saying that hundreds of their sales and trading teams in New York are going to stay there well into the night. Other banks preparing staffing plans if traders have to log in from home after hours. We even heard from one major investment bank saying that they've halted all technology updates this week so they won't have any computer glitches during this volatile trading hour. We've even heard colloquially from hedge fund managers on this show saying, hey, I'm based in London, but for this week, I'm going to be flying to the U.S. I need to be closer to the ground and closer to my team there.
So what can we learn from other elections?
Look, 2016, if it's anything to glance at, it was a surprise Trump win, yes, but the 2 days following were the two most volatile for the U.S. stock market that year. And then in 2020, when Biden won 4 days after the polls closed, that day was also the most volatile trading for the U.S. stock market. So we're poised to have a very volatile trading session. It's just a matter of when do we get a glimpse over which way it's going and which way it's going to swing. It could take a while to declare a winner, and market dislocations could become very confusing over that time. And not forget, we have the Fed meeting on Thursday, which can compound that confusion.
Yeah, there's a lot going on. Stephanie Baker is saying, watch out for Georgia and North Carolina, that we could see through the night, that first night from the 5th to the 6th. Valerie, thank you so much. Valerie Teitel there with the very latest on what some of this volatile election night could mean for traders. Now, let's also take a look at what's coming up this week. On Monday, we have China NPC convening. Tuesday, tomorrow, of course, is the U.S. election. Then we have a lot of results, not over Novo Nordisk, one of the most valuable companies in Europe. We have Qualcomm over in the U.S. and ARM. And then we have a lot of central banks. On Thursday, it's the Fed. Yes, it's a Thursday. And then we also have the BOE decision with a rate cut on the table. Up next to Bloomberg Brief, Danny Berger, Manus Cranny in New York, and this is Bloomberg.
sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating, and then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
Earnings season is here.
I think that this earnings season is going to be so important.
Bloomberg is first to break the numbers.
NVIDIA earnings now crossing the wire.
Bank of America, the retailer Five Below.
There is something for everybody.
With the smartest insights.
Weaker inflation is not great for earnings.
I think the consumer's a bit more resilient.
You've had earnings recessions flow through growth and then cyclicals and defensives.
Earnings cycle continues on Wall Street.
Continuing coverage on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Good morning from our global headquarters in New York. I'm Manus Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set your agenda.
A final twist with 24 hours to Election Day. An outlier Iowa poll gives Harris the advantage. Oil rises as OPEC delays its output hike, and Iran threatens a crushing response against Israel. And all of that ahead of a pivotal Fed decision just days after the election. Good morning, Manus.
That is a lot for everybody to take on board, but straight to ground zero, I think, where the reaction function is perhaps the most pertinent this morning on this. Some would say an outlier Iowa poll showing Harris at 47% to Trump's 44%. And of course, Iowa went to Trump in the 2 previous elections. The question the bond market is asking itself, has it reached too far into a Trump victory? This is all about what deficits you potentially end up with at the other side. So bond yields are down. JP Morgan say traders are trimming their election bets. You've got auctions this week, if you can believe that, 67 billion of 10s and 30s. But ground zero for the reaction function on the Iowa poll is the bond market. Roll over, have a look at the stock market. You've got the strongest stock run of any election year back to 1936. We're up an eighth of 1%. NVIDIA is up 2.25%. They're going to replace Intel in the market order. So last week, Mag 7 down by 1.8, saved by Amazon and Alphabet. It's going to be a treacherous week for trade.
It is, and it just shows yet again how this bond market can be whiplashed by narrative. We're used to it being an economic narrative that goes back and forth on bond yields. This time, it's the political narrative. It's an Iowa poll that has brought betting odds finally into the line where polls were. They were so skewed towards a Republican victory, and we're starting to price in a red sweep. This brings it back closer, maybe not to reality, because honestly, who knows what reality is, but at least closer to where the average of polls are.
And then you've got to ask yourself in the bond market, if 430 in the bond markets was representative of a fiscal deficit of 7.75 trillion, or was it representative of a Harris fiscal deficit of 4 trillion? Either way, if and nobody really knows where the betting is going on this. But the question is, what is a shock to the bond markets Wednesday morning?
Well, Mike Wilson of Morgan Stanley says that the bond markets will be the thing you need to look at to get your risk gauge, that all things will live and die by how the bond market reacts to the election. We are just one day away from Election Day. The latest poll from the Des Moines Register showing that Democratic candidate Kamala Harris has a 3% lead over her Republican opponent, Donald Trump. You got a little teaser that she was going to be joining us in that opening shot. Here she is now as Bloomberg's Anne-Marie Horder. I mean, Anne-Marie, Harris with Iowa, what do we make of the poll?
So look, I don't think anyone thinks Kamala Harris is winning Iowa. That has to do with the Democrats I spoke to this weekend, as well as definitely Republicans who view this purely as an outlier and actually pointed me to an Emerson College poll in Iowa over the weekend that had Trump up 10 points. But this poll certainly has been really a surprise of November and kind of a fitting way to end a very unprecedented election cycle. What Democrats have told me is that you need to look at this Iowa poll potentially showing some of those shy voters, potentially women. Jay Ann Seltzer, who runs this Des Moines, Iowa poll, said that what she saw is that women, especially women over 65, we know that these women show up to vote, were breaking for Harris at the end, and they're trying to capture a moment of time. But you have to think, she's up now in this poll. In September, she was down on Trump 4 points, and then it was double digits when Trump was versus Biden earlier in the summer. So it's definitely an outlier in the sense that this poll was not what we were expecting, especially when you look at historically this whole season, how Des Moines Register was marking Trump versus Harris, but potentially it could show strength in the upper Midwest and neighboring Blue Wall State with Wisconsin.
And that's where the focus is going to be in terms of the blue wall for Harris in terms of a victory, trying to sort of make it through there. In terms of the lay of the land today and tomorrow, I mean, the weekend was a whirlwind of just rallies and narratives. So where do we see them in the closing sweep?
Rallies, hot rhetoric. It was an interesting weekend. Harris will be leaving Michigan. She's heading to Pennsylvania. She's spending the entire day in Pennsylvania. That makes sense. If you look at the New York Times Siena poll over the weekend, Pennsylvania is where Trump erased her lead, and he maintains an advantage in Arizona. Trump is doing a different sort of end to the season. He's hitting North Carolina, Pennsylvania, and then we'll end the day in Michigan. Over the weekend, Harris has new strength in North Carolina and in Georgia. For Republicans to win the White House, for Trump to maintain, to get to 270, he really needs to make sure he controls North Carolina. North Carolina has not went to a Democrat since Barack Obama in 2008. He wasn't able even to recapture it in 2012. So the fact that potentially Trump is going to North Carolina and we saw some new strength Harris is showing there, he wants to make sure that that remains in the red camp. And he's only doing one stopover in Pennsylvania, which if you look at all the polls and everyone you talk to, it's going to come down to Pennsylvania, those 19 elector votes there. And that is where the most amount of money and time has really been spent in this election cycle.
Meanwhile, the Bloomberg team had a story out over the weekend that Jamie Dimon's wife, Judy Dimon, is out canvassing for Harris, where you have Dimon, who has been reticent to endorse either candidate besides reporting that behind the scenes he's a Harris supporter. How is corporate America getting ready for this and kind of hedging their own bets?
Yeah, it's an interesting point. So Jamie Dimon, I don't think unwilling to go door to door for Kamala Harris, given the fact the New York Times reported that he's not even willing to say it out loud who he wants to vote for, maybe potentially who he's giving money to. But his wife, clearly she's a Democrat out and about with Kamala Harris. I think what you see is a big hedge over the past few weeks. We saw it from really the tech CEOs. Donald Trump talked about this on Joe Rogan, how Sundar Pichai, the Google CEO, called him after his McDonald's stint to say it was a, quote, hit. We had Trump talking about the fact that Tim Cook recently called him to talk about what was going on with some financial penalties coming out of the European Union. We have Jeff Bezos telling the Washington Post editorial board, like, do not release that editorial that you have planned for saying the Washington Post editorial board was going to back Kamala Harris. There's reports that the Amazon CEO also had a quote-unquote checking call with the former president. So it does seem that corporate America is hedging their bets because, as you can see in the polls, it is a dead heat. We are going to into this election where no one really understands with conviction who has the edge.
Look, if last week was all about the Puerto Rico and Latin American vote, if you remember, we came into work on Monday morning and it was about what happened at the final clarion call of the Republican at Madison Square Garden. Here we are, and you see the Muslim community siding, or as it were, on stage with Trump. You again see a real focus in some of these smaller minority voting numbers.
Well, when you look at these states in 2016 and 2020 and how they were won, we're talking about 10,000 votes in a state like Michigan. Hillary Clinton lost Michigan in 2016 by 10,704 votes. If those voters that voted for Jill Stein, the third-party independent candidate, instead voted for Hillary Clinton, she would have won Michigan. These margins are so tight, which is why you see each of these individuals going out and trying to make sure they're shoring up specific communities and groups.
And I think it was one of your guests last week that said that this election will be lost and won in the suburbs in terms of where the fight is, going back to 2016 with Hillary Clinton. Anne-Marie, thank you. We're all going to have a busy couple of days. Joining us now is Paul Donovan, Global Chief Economist over at UBS. Paul, we're almost at sort of peak uncertainty in these markets. It's amazing how one outlier poll has shifted the bond market. What would be a VAR shock for you waking up? We may not know the exact result on Wednesday morning, but what could produce a significant VAR shock?
So I think in terms of the markets being shocked, it would be either a blue wave or a red wave, because I think there is sort of an assumption that we're going to end up with sort of divided government. The Senate perhaps goes more Republican, the House more Democrat, and then the White House on top of that. And the point about that is, with divided government, neither candidate for the presidency gets their fiscal policy through. They'll get some of it, but they won't get all of it. And if you have a blue wave or a red wave, then the entirety of the fiscal policy comes through, and that's a slightly different economic outcome. And I think that would be something that would certainly antagonize markets to some extent.
Paul, what about a scenario where the outcome is unknown, where it takes days and weeks? We've already seen within corporate America hesitancy and uncertainty to make any big decisions. If it is something that drags on, could there be lasting scars from that type of uncertain environment?
Well, I think one of the things is that the markets tend to assume an outcome. It would have to be really, really unclear, I think, for the markets to not tend one way or the other. Markets tend to make up their minds slightly more quickly than politicians do. In terms of the damage, if you've got genuine uncertainty, I mean, presumably this does not go beyond January of next year, because that's when the president is formally elected. So in that situation, I think you would have maybe a mild delay to investment, but frankly, in the grand scheme of things, this doesn't make a difference economically. We're talking about investment decisions for the long term, and you delay by 2-3 months. It doesn't make a difference, frankly, in terms of economic performance.
Paul, you make it very clear that protectionism is on the ballot. It's top of the ballot. It's what we're drawing all the numbers between Trump tariffs and a status quo under Harris. You dissected into gesture tariffs, selective tariffs, and sustained universal tariffs. Just talk us through the differentials here.
So with gesture tariffs, this is just sort of protecting a politically important industry. It's largely symbolic. You don't get a lot of retaliation with gesture tariffs. Both sides understand that it's primarily driven by domestic politics. And I think you will certainly see gesture tariffs under a Harris presidency. Selective tariffs, that is what happened in former President Trump's term of office, where he was applying selective tariffs to China. Now, the thing about selective tariffs is you can evade those over time because supply chains reroute, and that's exactly what happened with the Trump tariffs in 2018. It wasn't that American industry replaced China. That absolutely isn't what happened. You saw the rest of the world replacing China, and in some cases China replacing China because China just rerouted its goods. So selective tariffs have an impact, but they decay over time. Now, the universal tariff, that's more of a problem. because a universal tariff is absolutely against all imports either in a category or all imports from all countries, which is what President Trump has suggested that he might do. Now, in that situation, you can't see that decay. That doesn't evade because there's no way around that other than by smuggling, which, the US was quite good at in the 1770s when they were defying legitimate British taxes, but it's not something practical in today's world. So you end up then with a far bigger impact, and I think there are potential further impacts that come from a universal tariff, that you might see retailers using that as an excuse to raise prices even more than they have to.
If I can jump in on that
example.
point specifically, because you have been so good on the American consumer. You keep saying don't short the hedonism of the American consumer, and you've been spot on. If we do get the scenario that you're laying out, that retailers move on and put on those prices to the consumer, does that finally dent sentiment? Is that the thing that could undo the continued buying and strength we've seen from the consumer?
Well, we do know from the recent revisions to GDP that the consumer in the United States has got a bit more of a cushion than was originally thought, because the GDP numbers were revised quite significantly, and so they've got more savings. Now, why is that important? That's important because a tariff is a straightforward consumer tax. And so consumers will be paying more money to the US Treasury. It's the US consumers that pay the tariffs. And so that will then reduce their spending power. So real incomes would go down under the Trump trade taxes. The question is, do consumers then tap into their savings in order to smooth consumption out or not? I think that there would be damage to the consumer in this situation, it has to be said. And that's because I think you would see margin expansion by retailers on top of the tariff, so you get more profit-led inflation. That would do more damage to consumer spending firepower. But I don't think it would necessarily be calamitous, because we do now know that there are more savings in US households than had previously been estimated.
Paul, you're one of the best. Thanks so much for joining us. Paul Donovan there of UBS. Let's get to some of the other top stories that are trending on your terminal this morning. Ryanair shares, they are falling after airline cut its passenger growth target for next year because of delivery delays from Boeing. Ryanair said that 9 aircrafts planned for delivery in the third quarter will now arrive in the following 3 months because of that Boeing strike.
Moncler is said to be I'm Burberry. That's according to the online fashion publication Miss Tweed. Industry sources say LVMH boss Bernard Arnault has recently invested in Moncler and is in favor of such a deal. Burberry shares are up following the report.
And casual restaurant chain TGI Fridays filed for bankruptcy over the weekend. It's been struggling due to pressure from increasingly cost-conscious consumers. It's the latest in a string of troubled restaurants filing for bankruptcy.
Coming up in the show, oil prices push higher as OPEC delays its production increase and tensions escalate in the Middle East. More on that right here on Bloomberg Brief. Context matters.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Look at the next couple of years, rates on cash are coming down. Now is the time to make sure that you have a bond portfolio, because you will get higher returns there over time.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. AIM themes that move markets are on Bloomberg.
At the moment, we are not totally unhappy with what we see. It looks very much that inflation is on the right track of disinflation. You know, we come from very high numbers, as high on average for the whole of the euro area as 10.6%. And the latest reading we had for the inflation in September was 1.7.
Nobody covers business like Bloomberg. Tuesday, election night is here. Trust Bloomberg for up-to-the-minute results as the races for the White House and Congress are decided, as well as detailed analysis of what it all means for the economy, markets, geopolitics, and more. Tune in at 5 p.m. Eastern for an extended Balance of Power leading into full team coverage at 7, live from the Battleground States and Harris and Trump HQ. It's election night on Bloomberg. Context changes everything.
It's your Bloomberg brief on this Monday morning. Danny Berger alongside Manus Cranny in New York. Oil rallying this morning. OPEC Plus has agreed to push back a December production hike. Add to that escalating tensions between Iran and Israel. Those are also pushing prices higher. 2.8% is your rally in NYMEX crude. For more, let's go out to Bloomberg's Jomana Bersecci, who joins us from the world's largest energy event, ADIPEC, in Abu Dhabi. Jomana, what a time to be at ADIPEC. I know it's difficult to disaggregate what's moving oil more this morning between OPEC and the tensions, but let's just start with OPEC. What have they decided?
Yeah, so this decision came out late last night. OPEC Plus had decided to extend by yet another month the decision to put back 180,000 barrels per day of oil back to the market. There had been speculation in the run-up anyway to December the 1st as to whether or not they could move ahead with putting extra barrels, and they've decided to just bide their time a little bit longer, take one more month to decide whether or not the market can actually accommodate this extra supply that's about to hit. And of course, the same factors are going to be considered, the ones that we've been talking about the last couple of months, and that is the demand outlook. And remember, OPEC Plus themselves have downgraded their demand estimate next year several times this year. They forecast growth of around 1.6 million barrels per day, still above any other forecaster out there, namely because some of the signals coming through from China have been disappointing. Equally, there are concerns about the extra supply that is coming from non-OPEC producers. The likes of U.S., as you know, under the Biden administration have been producing a record amount of oil, in addition to new sources of supply from the likes of Guyana, Brazil, all of that about to hit the market as well. So they're in this position where they want to start putting barrels back to the market, but at the same time, they want to keep price stability. And this is an ongoing dilemma for the group. But what we did find out yesterday is that they've just postponed the decision by 1 month or so. Just another note quickly on the geopolitics as well. You're referencing some of the talk that has come out of Iran over the weekend, with Iranian leadership also insinuating that they may be actually looking at a reprisal to the Israel attacks on Iran from a week ago. So again, some geopolitical premium also being factored into the oil markets this morning.
Jomana, good morning to you. I mean, Amin Nasser at Aramco last week saying we're all underestimating the demand from China. So it's anybody's guess. Let's just flesh out a little bit more the tensions. We're talking, this is the Wall Street Journal article on the Iranian strong and complex response is what is expected from Iran. Again, no timing on this, but it again adds a small amount of war premium into this market.
Yeah, absolutely. And, you know, there was just a panel taking place now with some of the biggest energy companies in the world, the CEOs of BP and others on that panel. And they were all talking about the first outlook for China, and that is a big driver of the outlook for oil in the short term, but then also geopolitical conflict, and that is a big risk to the complex as well. I was just speaking to the Indian energy minister myself, and he also said if things really kick off, then maybe you could see a massive spike up in oil prices again. But it's a big unknown at this point, and even some of the smartest people in this industry cannot really foresee what's going to happen from a geopolitical perspective. But what I will tell you, Manus, I know that you've been here at ADIPEC many times. This year, guess what they're talking about? AI. Why does it matter? Data centers consume energy. That's another driver of energy demand. And what the industry leaders are saying here is you can't just rely on one source of energy. It is going to be a full gamut of energy sources providing that energy.
Okay, well, that oil market is bid this morning up 2.65% on Brent at 75.04. Jemana, thank you very much. Jemana Besechi there in Abu Dhabi. Coming up, Warren Buffett keeps cutting that Apple stake. The value of the holding down 60% in 2024. We'll give you the details.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Shorting a stock purely because you think it's expensive is a death wish.
These are companies that are growing their market.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Weekdays at 9 a.m. Eastern, only on Bloomberg.
Front page news this Monday morning. There are headlines around the world apart from the US election, but we're going to kick it off first of all with Benjamin Netanyahu's office is accused of leaking to foil the Gaza ceasefire. Now, the Israeli Prime Minister is accused of manipulating public discourse around the war in Gaza to stay in power. An investigation showed officials that include a Netanyahu aide leaked classified documents and exaggerated their significance.
Meanwhile, Manus, the FT has this, that China's lawmakers are gathering to approve long-awaited fiscal stimulus. It is a week-long session for the lawmakers, and they're expected to approve China's largest fiscal package since the pandemic.
It's been pretty piecemeal up until now. A lot of the argument has been, I mean, even Janet Yellen warned on the ability to deliver the growth numbers. Let's round it off. We've got Warren Buffett from the Wall Street Journal cutting, you got it, his Apple stake. Warren Buffett sold more Apple stock in the third quarter. Berkshire sold about 25% of their Apple holding in the third quarter, and that's even after the sales in Apple, Berkshire's largest stock holding at the end of September. But did he sell because he doesn't like Apple?
He has $325 billion of a cash pile. Does Buffett know something we don't?
It's a question. There's risks around the corner.
in technology for as long as you have been. Do you think AI is just as landscape changing as everyone else seems to think it is?
Sometimes things are overhyped. I don't think that AI is overhyped.
I think Etsy's uniquely positioned to benefit from AI. Finding that needle in the haystack is tricky. That's part of what makes Etsy both delightful and frustrating to people. And being able to serve the good stuff to the top fastest is where AI can really benefit us.
Our mission is keeping commerce human, and actually we talk about AI as helping us to be superhuman. It's really the partnership between AI and humans that makes Etsy work.
AI can help Etsy's customers personalize their searches and steer shoppers more directly to items they may want to buy. It's also helped the company improve reliability by predicting delivery times more precisely. But that doesn't solve a larger challenge, getting more consumers to think of Etsy more often and ultimately become repeat buyers. To this end, Etsy invented gift mode.
Getting in the top of mind consideration when you're thinking, I have a gift, I'm going to go to Etsy, just getting that to be more habitual. Gift mode provides a perfect opportunity for that. We get to know the gifter, but we also get to know the recipient. So it's a way to, sort of a more viral way to bring in more, introduce more people to Etsy.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
From our global headquarters in New York City, welcome to Bloomberg Brief. I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
A final twist with 24 hours to Election Day. An outlier Iowa poll gives Harris the advantage. Oil rises as OPEC delays its output hike, and Iran threatens a crushing response against Israel. And all that ahead of the pivotal Fed decision just days after the U.S. election.
I think it would be an understatement to say it's a monumental week for this bond market. Elections tomorrow, Fed Thursday, just off of the worst month for the global bond market since September 2022. Yields lower this morning after that poll you mentioned, Manus, in Iowa, giving Harris the advantage, a 3-point lead. Most polls had Trump 9 points ahead. The dollar also falling off the back of that. Bloomberg dollar spot weaker by 0.5%. Stocks, the NASDAQ last week ended its streak of 7 consecutive weekly gains. That was based off of earnings. Today we go tepidly higher, up 0.2% for the S&P. But Manus, I put the peso at the bottom of the screen there. Dollar weaker by the peso by 0.8%. If you want to look for where the highest beta is to the Trump trade, it's clearly not in this equity market. The equity market is not bothered by what we're seeing in the polls. It is treasuries, it is currencies.
And then it comes down to how much does the treasury market move by. Let's say it does bounce back and we end up with a Trump or a red sweep. The question is then, do you break 450, and at 450 in the bond market, which is 20 basis higher than where we were at the peak on Friday, how much does that upset the equity market? How much does that upset the bond market? Right now, they've overreached into the Trump trade.
Well, this comes back again to the difference between now and 2016. In 2016, Trump winning was a surprise. So you did have this leg higher in yields. This time, we have already had the movement. Yes, we're pulling back today, but how much more further can yields really go if we do see a Trump presidency, considering much of the market has front-run it?
Yeah, it depends who's in the sideline. As you said, a lot of industry had moved their production to Mexico. Mexican peso is the one that you targeted at the bottom of the screen. Yeah. All of G10 this morning, all of G10 are rallying furiously. But we are one day away from the U.S. election 2024. And the latest poll from Des Moines Register is showing Democratic candidate Kamala Harris with a 3% lead over her Republican opponent, Donald Trump. Let's bring in the team. From Bloomberg, it is our Miami bureau chief, Felipe Marquez, is following the Trump campaign in Florida, and Skylar Woodhouse in Washington, D.C. Felipe, let's bring it to you first of all. We have, some are saying, this outlier poll in Iowa, which gives Harris the lead over Trump, but it's about the body of the research. It's about the women factor and the independent voters. How irked is the Trump camp? Because there's already been some response from Donald Trump on this.
I mean, the main message Donald Trump tried to hammer this weekend is that he's the clear front runner, despite the polls showing he's not. It's actually it's actually a coin toss, right? It's actually all within the margin of error. But he tried and tried to hammer this message. He's also spent a large amount of time this weekend suggesting without evidence that the election system is rigged, that the media, the firming polls, they are corrupt and conspiring against his campaign. So that was the main takeaway. But we can also see him playing defense, right? Like, he spent a lot of time in North Carolina this weekend. He'll also be in North Carolina today, which is the only swing state he never lost.
Skylar, let me bring you into the conversation. Apologies, Felipe. I want to bring Skylar into the conversation because we see Harris only specifically concentrating Pennsylvania for the final hours. What does that tell us about her campaign, that she is sticking to that swing state?
Yeah, I mean, look, Pennsylvania is a must-win battleground for both candidates. And Harris, the campaign, they are spending all day today in Pennsylvania. Harris is going to be doing rallies in Scranton, which is Joe Biden's hometown. She's going to be doing rallies in Philadelphia, Pittsburgh. So she really will be crisscrossing the entire state today. And that final push to sort of, and this is what her campaign has said, you know, for a while, is that they're trying to just move the needle, you know, just like the smallest amount could potentially bring them that win in Pennsylvania. And I think the fact that they're spending all day today in Pennsylvania, I mean, over the weekend, she was in Michigan and she was, you know, traveling to other states, but the significance of her being in Pennsylvania today just shows how much that state is in play for the campaign.
And Felipe, just to bring it back to you, obviously North Carolina was the one that he won in 2020. He wants to hold that. The narrative that he put forward over the weekend, I mean, it was very, very wide-ranging. It was not on the core message of the economy. It was on a number of different things. It was like taking some aim at the fake news. It was about trying to sow the seeds of the veracity of this election. What do we get in the closing day today from him?
Okay, so
well, I think for the Trump camp.
Let's go to Felipe first
of all.
And then we'll
Sorry,
get you, Skylar.
Do you in just a second?
It's early. Okay, so from Trump today, obviously he's going to be in Pennsylvania. He has 2 campaign stops there. As Skylar just said, it's a must-win state. But he's also going to North Carolina again, which again portrays the defense movement he's making. And he also has a stop in Michigan. So again, we're going to see all the candidates battling across these must-win states. But differently from Kamala Harris, Donald Trump's going to be doing a couple stops today across his campaign in different states.
And Skylar, what is the closing argument that you see coming?
I think for the Harris campaign, one thing that Vice President Kamala Harris has been sticking with leading up to Election Day Eve today is, you know, to quote her, she's always saying it's the contrast between the 2 candidates, between her and former President Donald Trump. I think today she's going to focus on, you know, women's rights. That's been a big part of her campaign, you know, and to, especially in Pennsylvania, to win some of those white female suburban voters. That's definitely, I believe, going to be a talking point for her today, as they, you know, especially maybe some swing voters are still making up their minds, you know, see if she can move the needle there by talking about women's reproductive rights. I think she'll also, you know, talk about the economy. And, you know, that's been something that she has, what polls show that voters trust Trump to handle the economy a little bit more than they do for Harris, but Harris has made some grounds there, but I think she will still hammer away at that. And then just the main theme of democracy. That's been a big talking point for the Democrats this election season, and I think they're going to really nail that into the ground today, and how you know, her campaign is about preserving democracy, as they, you know, have tried to use that to win over voters who might be concerned what a Trump presidency Part 2 could look like.
Felipe, Skylar, appreciate your time so early this morning. Felipe Marquez and Skylar Woodhouse. Now, Politico, writing this morning of the fear of a second Trump presidency and J.D. Vance and what it would mean for the business community, they wrote the Ohio senator represents a new kind of conservative right that is skeptical of corporations and eschews the GOP's old free trade ideology. With Vance by Trump's side, some corporate leaders worry a second Trump administration would be even more hostile to their interests than the first was. Joining us now is Elizabeth Pancotti, Director of Special Initiatives at the Roosevelt Institute. Elizabeth, you've done great work looking specifically at how the business community has been getting ready for this election. What do you understand in the type of hedges that they're putting on and preparing for either way?
Hey, good morning. Thanks so much for having me. I think we're really seeing the business community have a lot of uncertainty here, especially in the retail sector. They are hedging. They are making orders for 9 to 12 months from now. There's just a huge lead time. They don't have the time to sit around for another week or two until we have results. And so you've seen retail CEOs say, AutoZone, Columbia Sportswear, and others say, we are making these decisions, sort of hedging that Trump might win and there might be tariffs on China or other countries. And so pricing those things into their decisions. Because Trump hasn't been so clear on what those tariffs will look like, he's ranged from 10% to 1,000% of where those tariffs will land. It's difficult for businesses to kind of make those purchasing decisions, decide what they'll pass on to consumers, where they might want to shift those orders from. And so there's a lot of uncertainty in the business community about the entire election, but especially on the trade component.
Elizabeth, good morning. Look, we're going to white-knuckle this for at least 3-4 days, we expect. We're not sure when we're going to get the full result. But if we take Trump 1, the version of Trump 1 administration on tariffs, on tax, etc., and then you look at the possibility of Trump 2, can we assume that the maximum disruption is already kind of priced into these markets, or is it a more emboldened Trump that potentially could come back to the White House and it could be a lot more disruptive than people really perceive?
I think it is likely to be a lot more disruptive than people perceive. I think the question on whether the markets have priced it in is a good one. This has been the least volatile, the second least volatile October in an election year in the last 50 years. The S&P 500 is up 20% this year. It's the strongest markets year in nearly a century for an election year. And so we are seeing quite stable and quite good markets, probably because of the economy that we have now. And I think markets are pricing in some level of uncertainty about the election. Whether or not they expected the Seltzer poll out from Iowa last week and, what weights they're giving to Kamala Harris versus Trump is a good question. But I think on trade, we are likely to see a much larger package of tariffs and a much more aggressive stance on trade than we saw in the first Trump administration. A lot of those tariffs were kept in place by the Biden administration and a little bit were added. They were kind of maneuvered there over the last year. But in a Trump 2.0, I think we are likely to see, 5 to 10 times the tariff package that we saw in the first administration, and really a different approach to industry. You also have the tax fight to look ahead to, which could have huge effects on corporate margins, on decisions. Trump has also teased, Republicans have teased repealing incentives for manufacturing, clean energy, semiconductors, and that could really affect bottom lines as well.
Elizabeth, you mentioned, though, that the strength that the U.S. economy is coming from. You have this line in your research. I'm going to be honest, I had to read a couple times because I was in disbelief the first time I read it, that if Harris is elected, she will be the first Democrat president since before Eisenhower to not come in during a crisis as you outlined being a recession or assassination. She is coming in at a good time, if she wins, for this economy. What does that mean, the type of policy we would get from a potential President Harris?
I think she has outlined a suite of policies. You obviously have a big question about whether she has the Congress to pass them. I'm looking at the Ohio and the Montana Senate races in particular. But I think there's a real question of the sense of urgency that she'll have for governing. You had President Obama and President Biden come in and day one, even before then, really hit the ground running on a recovery policy package. Clinton to some extent, and even going back further than that. But Harris doesn't have that. We don't have 10 to 20 million people unemployed. We don't have high inflation. We have quite stable inflation. We have really strong markets. We have good consumer sentiment. Things are also on the rise. I think we'll see where the Fed lands later this week, maybe before we know the outcome of the election. But Harris is coming in on the backs of a really strong economy. And so her propensity and sense of urgency when it comes to governing might be a little bit slower than we've seen in past Democratic administrations.
And Elizabeth, just to interject, because we're up against the clock here, in terms of the propensity to move with urgency, I'm curious, who survives in either a Harris or Trump administration? Lena Khan and Jay Powell, do you think they both coexist? J.D. Vance is a bit of a fan of Lena Khan. The billionaire investors or backers for Harris might not be. Does she survive?
I think Lena Khan stays in a Harris administration. I think you also, with respect to the entire cabinet and appointed officials, you've got to look at who you can get through the Senate. The nice thing is you don't have to reconfirm Lena Khan for several years, and so I think there's likely to be less cabinet and agency head movement in a Harris administration if she loses the Senate. If Trump's got the White House and the Senate, I think you're likely to see a lot of movement, and I question, how much sway J.D. Vance has over what Trump cabinets looked like, given his comments on the campaign trail.
Indeed. Well, a lot of industry might see it a little bit differently in terms of the M&A action in this country. Elizabeth, thank you very much. Elizabeth Pancotti there of the Roosevelt Institute with us this morning, counting down to the U.S. election. 24 hours to go. Oil is on the march higher this morning. Iran ramps up the rhetoric on what it's planning to do against Israel. We have the latest on the story right here on Bloomberg Brief.
On Bloomberg Technology.
We're excited to really change the expectations for space companies where you have this always-on, reliable, and frankly dynamic satellite connectivity that you would expect of your power grid.
Easier access to space means more demand for space, and that's the definition of an exponential growth function.
I think that's what's so exciting from a business perspective. If you can do it, you're one of a few numbers of organizations in the history who've actually pulled it off.
Don't miss Bloomberg Technology live every weekday.
We should talk about how we really can imagine how we use this technology. I talk to doctors, I talk to, biochemists, I talk to teachers, I talk to artists, I talk to, farmers. There's so many ways we can imagine using this. There's so many ways we can use this to make people's life better, work better. I don't think we talk enough. We are talking about gloom and doom, and it's also just a few people talking about gloom and doom, and then, the media is amplifying that. I don't know what you're talking about. Yeah. I don't think we give enough voices to people who are actually out there in the most imaginary way, creative way of trying to bring good to the world using AI.
Earnings season is here.
Third quarter earnings season, as we've been talking about, really in high gear.
Bloomberg is first to break the numbers.
We have some big earnings after the bell. Earnings from Caesars crossing the Bloomberg terminal. Mondelez reporting Reddit, AMD, Snap.
Let's keep the conversation going.
With the smartest insights.
The bar keeps getting higher. 20% growth rate when your comps get tougher. How much can you beat and raise?
Continuing coverage on Bloomberg. Context changes everything.
It's Bloomberg Brief. I'm Manish Kranny alongside Danny Berger here in New York. Tensions continue to rise in the Middle East as Iran plans its next attack on Israel. The Wall Street Journal reporting Iran is planning the next attack with more powerful warheads and other weapons than before. The country's supreme leader vowing a harsh reaction to Israel's missile strike on October the 26th. Golnar Motovali joins us with this. So, Golnar, the response here is that the rhetoric that's coming from Iran sounds pretty punchy in terms of the retaliation. This was somewhat unexpected. I mean, they expected a response, but the rhetoric is setting the stage for something quite significant, isn't it?
I think in some respects it is, but on the other hand, the rhetoric hasn't changed that much compared to what we've seen over the past few months. I think we're in this kind of strange sort of holding position where both sides are clearly looking ahead at the outcome of the US election. That's my sense. And I think there's a possibility that the way that they've been conducting what looks like fairly calibrated direct attacks and strikes on one another and counterattacks could become some sort of new normal for us since their shadow war kind of came out into the open after October 7th last year. But I think what's critical with Iran's rhetoric today is the fact that they want to continue to keep Israel obviously on alert and to kind of continue this tenterhooks status across the region over what they might do. And I think it's important what's going on in the background diplomatically, what their officials are saying to other officials in Arab countries and neighboring countries in the Middle East.
Can you get just a bit into that, what the discussions look like at this moment as that kind of tit for tat continues in the foreground?
Well, we have obviously this, as you mentioned, this rhetoric that we had over the weekend from Khamenei, the supreme leader of Iran. He said that Iran will deliver a crushing response to Israel's October 26th strike. And at the same time, Iran's foreign minister, he's just finished this kind of back-to-back diplomatic shuffle of quite an intense tour of the Middle East, going to different Middle East countries from Saudi Arabia to Jordan to Egypt, basically seeing everyone he can. And what those discussions have been behind the scenes, behind closed doors between Iran's foreign minister Abbas Araghchi and his counterparts in the region, I think that's crucial and critical to what Iran does in the coming weeks or days.
Golnar, we appreciate the update. Bloomberg's Golnar Motivali there. All right, on to Berkshire Hathaway. Their cash pile reaching a record $325 billion. Its latest results show that the company cut its stake in Apple once again, which helped boost that cash hoard. For more on Berkshire's earnings, let's go to Charlie Wells, who joins us now. So, Charlie, Warren Buffett still has this giant pile of cash. What do we make of it?
I mean, Danny, look, with that giant pile of cash, you could buy pretty much any company in the world, but isn't. A lot of that money is parked into short-term U.S. Treasury bills, which says something about valuations when the world's most famous value investor is parking a lot of his cash in Treasury bills and not even buying back the shares of his own company. So that was something that was really notable out of this third quarter earnings report, that Berkshire Hathaway is not buying back shares. That's something that they haven't not done since 2018.
I mean, they sold over $34 billion worth of equities in this quarter. Look, the big debate is cutting their position in Apple. Is that a lack of comfort by Buffett in terms of holding such an outsized position? Because this was built up during the tenure of Charlie Munger, and since he's passed, they've shifted on Apple. Do we have any clarity around the thinking on that?
Well, man, it's funny you should ask that, because that is the big issue that analysts have been trying to parse since these results came out over the weekend. You know, is this Warren Buffett kind of picking up on some softness in Apple, trying to kind of limit some of the exposure there? Of course, they've had weakness in that ultra-competitive Chinese market. But then on the flip side, you know, you've got the fact that Apple has long been Berkshire Hathaway's top holding. This may be just an attempt to kind of, you know, mitigate some of the ballooning of that position over time and potentially head off some tax hits if they were to sell those shares in a higher tax environment going forward.
Yeah, I mean, it wasn't that long ago in May that he was praising Apple, calling it better than Coca-Cola and American Express. Just within these earnings, I wonder, Charlie, does it give anything a tilt of the hat to the future of Berkshire Hathaway, a company that just for so long has been helmed by Buffett?
I mean, look, Buffett's 94 years old. Let's hope that he can continue along into the future. But you can't spend $325 billion in one day. I mean, you probably could, that would be quite an extraordinary day. And so if you think about the CEO that's been tapped, Greg Abel, he very likely would inherit this huge cash pile. And I think there's another interesting point that James Shanahan at Edward Jones has made previously, which is that Berkshire Hathaway is going to change, right? It's a company that's kind of shifting out of being kind of an investment company and moving more into this environment, into this iteration where it's an operating company, where it's thinking a lot about kind of earnings optimization. So that is an evolution that we might see going forward.
If I had $142.6 billion, according to Rich Go, at 90-odd years of age, I'd be sur la plage, Charlie. Charlie Wells.
Especially at 94.
At 94. At 94, if I'm still doing TV, somebody just take me.
I hope you are.
Yeah. Well, with you.
With me. Till the end, man. It's till the end.
Danny and I will be with you through to the end of the US election cycle, that's for sure. We're
At the very least.
At the very, very least, we can assure you for this week. Coming up, what else have we got for you? A little bit of markets, a little bit of stocks on the move. There are other stories apart from politics. We'll try and give them to you in the closing minutes of Bloomberg Brief.
Day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Bloomberg has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. DraftKings has become a top performer in the booming U.S. sports betting industry. CFO Alan Ellingson knows the company must stay focused on change and innovation to succeed.
We're in an evolving business. We're constantly evolving and tweaking our expectations for how things should be performing. We're constantly looking at things in different ways.
Watch Chief Future Officer, only on Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
It's your Bloomberg Brief. I'm Danny Berger alongside Manus Craney in New York. It's going to be an insane week. Let's set you up for it. Americans will be heading to the polls to cast their votes for the next president of the United States. That happens on Tuesday, though we're unlikely to get results right away. Then it's a busy Thursday. We'll have the Bank of England rate decision. That happens in the morning. Then it will be followed by the Federal Reserve and Chair Powell's news conference in the afternoon. Manus, hold on to your seats.
Hold on to your seats. Hold on to your hats. You're right. It is going to be insane here. We've got a little bit of stock movement for you. Constellation Energy falling ahead of the earnings before the market opens. Shares are up 121% year to date. Viking Therapeutics, this is on weight loss. The obesity pill shows promise in a study, an average of 8.2% body weight loss on the 100 milligram dose. And then DJT, which is, of course, Trump Media, falling ahead of the election. It shed by $3.3 billion in October after a 324% surge into the election. The Iowa poll, the reach is large and long. Danny.
Yeah, let's get a quick look on what other assets are moving on that poll. It is yields coming in this morning, and it is the dollar weakening. The Mexican peso stronger by about 0.8% versus a dollar. Surveillance, they'll take it from here.
prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
It all comes down to the election. The race in various battleground states are quite tight.
My base case is that you have Republicans with 52 seats in the Senate.
All the T's are crossed and the I's are dotted, and we will have an outcome on Wednesday.
We think we get a very clear result in the first 48 hours post-election.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get this week started. Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now with 1 day to go. Going into a defining week for the global economy and financial markets worldwide. Equity futures on the S&P 500 positive by 0.25%. The fireworks is right here. The bond market's rallying. Chinese equities are doing okay. The Mexican peso is stronger, and it's one poll shaking things up over the weekend, showing Harris with a 47 to 44% lead in Iowa, of all places.
And it's by Ann Seltzer, who is one of the most respected pollsters who got both the 2016 and 2020 election.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Much polls are getting things wrong. Everyone kind of agrees the polls are not absolutely correct. Question is, which way are they going to swing? And nobody has a conclusive answer. There's also a question of exactly what the narrative is. And Michael Zezas over at Morgan Stanley said, beware the hot takes, because no one knows anything. And you can create a narrative very quickly that can be upended once we get the results. This, to me, feels like a market where nobody wants to be long anything, but everyone feels like they don't want to miss out on something, but there's no certainty whatsoever.
I will say this is a fitting way to end this election cycle. A surprise in November from this poll. Is it indicative when we look back, or is it not? Is it an outlier? How has this election cycle been? It's been unparalleled compared to any other in American history, given the fact that the top of the ticket on the Democratic side changed this summer, and the Republican nominee, former President survived 2 attempted assassination attempts. We have never seen an election cycle like this one.
And it's potentially unprecedented when it comes to how close the polling has been so close to the election. I was looking back at races where you saw similar closeness, maybe Bush and Kerry in 2004, Bush versus Gore in 2000, but even there was more fluctuation. Reagan versus Carter in 1980 and Kennedy versus Nixon in 1960. These are the corollaries that people are looking back to.
NBC poll released Sunday. The race deadlocked 49-49. This is finally balanced. Equity futures firmer by 0.2%. Coming up this hour, we'll catch up with Priya Misra of JP Morgan Asset Management as Trump trades unwind ahead of Election Day. John Lieber of Eurasia Group as some U.S. polls begin to shift towards Harris, and Leila Richardson of ADP on the balanced U.S. labor market. We begin this hour with traders dialing back bets on a Trump win, with Election Day just 1 day away. Priya Misra of JP Morgan Asset Management writing, binary outcomes in the election is very close, so risk-reward is not great to trade. Some of the market reaction to 2016 was because a Trump win and a red sweep was a huge surprise. This time, we think that the move in the 10-year is to do with a Trump sweep being priced in. Priya joins us now for more. Priya, good morning.
Morning.
Would you say some of this move is just rebalancing some of the pricing around that story this morning then? Yields lower across the board?
I think so, but it's still not that much, because if you look at what happened after the payroll report, we had a weaker payroll report. Now, I'm saying it's still a normalization story with the job market. We saw, that very strong number the month before essentially being offset by what we saw last month. So, but interest rates still rose. I mean, we had the initial reaction of lower rates, which made sense. And then I'm scratching my head the rest of the day as rates rose, because I think the market said, well, it hasn't been about the economy. We're in a soft landing. Every market's pricing that in. It's all about what happens going forward. What's the policy risk? And I think that's why the market, those interest rates rose into the end of Friday. We're taking that back. I still think we're going to get a reaction whenever we know the outcome of the election. You're going to get a reaction either way. But it's not very asymmetric, because I think we're essentially pricing in slightly higher chance of a Republican sweep. It's been coming down in the last few hours, but it's still, 55-45, I would say, is how the market's pricing.
When the whole curve was south of 4%, the biggest risk was re-acceleration of the U.S. economy, and whether policies that come out of this election contribute to that re-acceleration risk. Do you think we can park that fear based on the numbers we saw on Friday?
I think from the economic momentum, yes. From the policy side, that's where the big question still remains. Now, I would argue, if you listen to the campaigns, you can potentially say that in any sweep, you can really get that re-acceleration, because you can get, right from fiscal stimulus, wherever that fiscal stimulus comes from, whether it's spending or taxes. I would argue no administration has the kind of fiscal space or inflation space that existed in 2016. So I think they can try, and the market's going to say, no, not so fast. And I think interest rates are going to rise. I think, sub 4% 10-year is okay. You start getting 4.5%, 5%, particularly if it's real rate driven. 10-year real rates are close to 2%. It's extremely restrictive. The Fed believes it's restrictive. Now, but does the Fed keep cutting rates if you're going to get fiscal easing? Not so much. So, if I could fast forward for all our sake 6 months out, I would say, irrespective of the election outcome, we're not going to get significant sweep. But is that the administration inability to do it, if you don't get a sweep? Or is it the market saying, no, not so fast, interest rates are going to reprice, and then that's actually going to put a lid on how much any administration can get done?
So is your argument that everyone's getting this wrong? That a Trump trade and a Harris trade both would not support risk assets nearly as much as people think, because there isn't the fiscal space to really be expansionary in the way some people think?
Yes, I think, so I would say that irrespective of the outcome, you're not going to get that much fiscal stimulus, because the market's going to stop it. Whether risk assets are okay, look at the fundamentals of the economy. I mean, soft landings are rare, and we've gotten that. I'd like to give the Fed some credit. I think starting to cut rates, suggesting that they'll continue to cut rates, that's part of it. The fact that households, companies did the right thing when interest rates were low, they locked it in. There's that savings buffer, the fact that the wealth effect is high. So I think the economy supports risk assets. Whether you're going to get that from fiscal, and I think we are going to, so let's say you don't get fiscal, and the Fed continues to cut rates, I think, we can actually maintain that soft landing.
So here's the question. At a certain point, you have to wonder going forward whether this actually is a moment that can change the trajectory of the U.S. economy. That's one argument that people have, that essentially look at the direction of markets and bet with it because momentum is your friend. Julian Emanuel talking about that yesterday. Is that your belief too, that essentially this isn't as momentous moment as people think?
I think if interest rates rise too much, and I would say too much, we're pretty close to that too much point because of what's happened with 10-year real rates. So I think it is momentous if interest rates rise, because I think risk assets, the economy, we're all sensitive. This idea that the economy is not sensitive to interest rates, there are lags, and we know they're long and variable. I think we're at the point where enough time has passed with interest rates being high that if you do get a rise in rates, I think then it threatens the economy, it starts to threaten risk assets. So it's momentous if long and real rates continue to rise. If we stay around here, I actually think the soft landing can be maintained. Risk assets are fine. I mean, are we going to get 20% returns? I think not. But, I don't see a big correction if interest rates can just sort of hang in here. And I'm sounding biased, like I only care about interest rates, but the bond market matters.
It's okay.
Interest rates
I
do.
agree. Priya, but you did mention if we were all sitting around this table 6 months on, talking about policy. Well, let's talk about the two big fiscal milestones. One is January 1, debt limit. We're going to hit that, and they're going to have to use extraordinary measures. And then at the end of next year, the Trump-era tax cuts expire, some provisions in that bill. How do you think Congress deals with this?
It's the trillion-dollar, multi-trillion-dollar question. So I would argue there is agreement. Both sides have an agreement that people making less than $400,000, those tax cuts should continue. Should not be allowed to expire. I think that's the easy one. The rest of it, people making more than $400,000, now that's where you need some pay-fors, and I think that's where it's going to matter. If you have a sweep, I think that gets extended, but if you don't, there is a decent chance that those tax cuts expire. I'm not going to say that, people like to pay taxes, but is the impact that high for people making $400,000? They have wealth effect. I mean, we're seeing a bifurcated economy. Monetary policy is not restrictive for people making, in the higher income bracket. If they have to pay more taxes, well, they've got wealth effect on in terms of what's happened with the market. I don't see that as being such a big economic impact. Let's say those tax cuts do expire.
Can we talk about the debt ceiling? It always gets done, but the past few years, the fights have gotten very intense.
Right, and if you have a divided government, it is going to be intense. Now, I would say the Treasury has extraordinary powers in terms of trying to extend it for a couple of months. Then we do get tax receipts. They can do things with bill issuance. I think we're looking at a summer time frame. And I do go back to 2011. In 2011, it was the last time we had such a contentious fight. We had a sequester put in place. Is that the way out? I think, now the sequester actually, other than a year or two, didn't continue. But I can see Congress saying, let's put some sequester, let's not allow spending to continue to get out of hand. We've got a long-term fiscal sustainability problem, and the market's telling you that, the curve is telling you that. So this might be a chance. I mean, I'm trying to find the positive here, that it's going to be messy, volatile, we'll all stress out.
This is new. What you're saying is new, that the bond market has the potential of acting as a regulating force on the ambitions of Washington, D.C. That's a fairly new phenomenon, isn't it? For America, at least.
Yes, we've not had the bond vigilantes in place for a while, but I would say with Fed funds at zero, it's hard for the bond vigilantes. Now, Fed funds, and even under the Fed scenario where they continue to cut to 3%, that's much higher than zero. So the bond vigilantes are coming out of the woodwork. You're seeing it globally as well. Look at the UK. We saw this with Liz Truss. We saw it again last week. You've certainly seen it in emerging markets. I would say the US is not immune. We're a little less vulnerable than the rest of the world because the dollar is still the safe haven currency. But I don't think we should take it for granted. I can't tell you if it's next year or 5 years from now, but the bond market's absolutely saying this is an unsustainable debt trajectory. You have to do something. Otherwise, interest rates will rise to the point where it chokes growth. And then, then I think Congress wakes up.
Priya, it's good to see you. We'll see you again this week. Priya Misra of JP Morgan Asset Management, with bond yields lower this morning. Vigilantes on the sidelines. We're down 10 basis points on a 10-year. 4.28. With an update on news elsewhere with your Bloomberg brief, here's Danny Berger. Hey, Danny.
Hey, John. Security fencing was added around key locations in Washington, D.C. yesterday. The Washington Post reported that the Secret Service erected new 8-foot metal fences around the White House, Capitol, and the Vice President's residence. District authorities are preparing for potential unrest following tomorrow's election. At a news conference, Washington's police chief said that he knew of no credible threats. Judy Dimon, the wife of J.P. Morgan's top executive Jamie Dimon, canvassed voters in Michigan over the weekend in support of Kamala Harris. Jamie Dimon, for his part, has declined to publicly endorse either candidate, pledging that he would work with whoever is elected. Judy is a longtime donor, though, to Democratic candidates and an education advocate. She's been more public in her support. According to Axios, she donated $250,000 to Harris and the Democratic National Committee. Ryanair shares are erasing their earlier losses, up about 0.5% in the European trade. The Irish low-cost carrier cut its passenger growth target for next year because of delivery delays from aircraft supplier Boeing. The company said its outlook is highly dependent on Boeing ending the strikes sooner rather than later, and production ramping up relatively quickly. Ryanair CEO Michael Leary will join John, Lisa, and Anne-Marie at 8:15 a.m. Eastern. John, looking forward to that conversation.
Danny, thank you. As are we. In about an hour and about 30 minutes, 45 minutes, 2 hours away. Okay, it's early days. 2 hours away. Thank you, guys. Up next on the program, 1 day to go.
We stand on the verge of the 4 greatest years in American history. You watch. It's going to be so good.
And we will win because here's what everyone here knows. When you know what you stand for, you know what to fight for.
That conversation up next. Live from New York City this morning. Good morning.
The world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
I know I often sit here on a Monday morning and say, what a week, what a week. Park all of that. What a week. Election day tomorrow, Federal Reserve on Thursday, equity futures into all of that, positive by 0.2%. This move in the bond market, Lisa, down 10 basis points on a 10-year. We all saw that poll over the weekend. I think we all thought the same thing. The bond market's opening up Monday with a bid.
And that's basically what you see right now, because in betting markets, you now see it flipped, where Harris has the edge at a time when that Iowa poll from Ann Seltzer showed that Kamala Harris did have a 3-point lead in Iowa, a state that has gone Republican the past 2 elections, and a lot of people thought was in the bag for Trump.
Is it an outlier or the real deal? Under surveillance this morning, 1 day to go.
We stand on the verge of the 4 greatest years in American history. You watch. It's going to be so good. It's going to be so much fun. It'll be nasty a little bit at times, and maybe at the beginning in particular, but it's going to be something.
And we will win because here's what everyone here knows. When you know what you stand for, you know what to fight for. We have an opportunity in this election to finally turn the page on a decade of politics driven by fear and division.
So here's the latest. Trump and Harris making their final appeal to voters before Election Day tomorrow. Both campaigns targeting critical swing states as a flurry of polls project a tight race, with one poll in particular shaking up the conversation over the weekend. The Des Moines Register showing Harris leading in Iowa 47-44. As pollster Ann Salsa says, it's hard for anybody to say they saw this coming. Joining us now is Bloomberg's Akela Gardner, following Harris, joining us from Detroit, Michigan. Hey, Akela.
Hey, Jonathan. Yeah, Harris is in Michigan today, but she's going to spend the rest of the day in Pennsylvania, really focused on shoring up that blue wall. And Pennsylvania is the biggest of the 7 swing states that has the most electoral college votes. So it's really in the crosshairs between Donald Trump and Harris. But something that was really notable yesterday about her rhetoric is she's really focused on making an affirmative case for herself. She did not mention some of Donald Trump's comments about suggesting that he should be shot through the press, talking about guns trained on former Congresswoman Liz Cheney. And she has really spent the past couple days holding regular gaggles with reporters, really with that contrasting message. She did not do that yesterday. She was really focused on her swing state travel. So her advisor tells me she's really starting this the way that she's really finishing this, I should say, the way that she started it, really making an affirmative case for herself, telling people about her policies. And that is something that I've heard from voters, that they really want her to focus on the quote unquote joy that she talks about on the trail. People know about Donald Trump. This is sort of already built into his character when it comes to people who have voted for him. And you heard her talking in that clip before about how Donald Trump has run for almost a decade now. She's been in this race for only 3 months, and yet she says momentum is on her side.
Akela, what's the team around her saying about that Iowa poll? Do they have some hope that potentially she could flip this deep red state?
I don't think Democrats are paying too much attention to this Iowa poll, but really what they're hoping is that it could have some suggestions for other swing states, particularly in the Midwest, that maybe Harris could be performing better with moderates, with white voters. So that's really what they're watching here, is potentially the spillover in those 7 battleground states, and particularly the blue wall, which most strategists say is her best path to 270 electoral votes, which she really needs if she can get Michigan, Wisconsin, Pennsylvania, and that electoral college vote in Nebraska. That's really the path that they're focused on right now. And I think most polls show her performing better there and Trump performing better in those Sun Belt states.
Akela, appreciate the update. Akela Gardner there of Bloomberg News, leading the coverage of the Harris campaign. John Lieber of Eurasia Group joined us now. John, I can tell you, and welcome to the program, this bond market seems to be paying attention to that Iowa poll. Are you?
Yeah, absolutely. I mean, that poll was a real shocker. It shows Harris up in a state that has been trending steadily to the right over the last couple of years. And honestly, it's a plausible result. It's an outlier. It's the first one that's shown Harris with a lead in Iowa. But Iowa is not as red as it looks. It is a more moderate Republican state. Obama won it in 2012, and it's really only during the Trump era that you've seen the rural parts of Iowa flip strongly to Republicans. But it's possible that what we're seeing right now is a bit of a realignment. And the areas where Harris was particularly strong in that poll was with women. Iowa passed one of the more restrictive abortion laws in the country with a 6-week ban on abortion access. And there's been the subject of a endless flood of ads in the state over the last several weeks. So the idea that this could have shifted in Harris's way over the course of this campaign, where Donald Trump's on the ballot now for a 3rd time, and some Americans are clearly tired of this guy, is actually totally plausible and a very bad sign for the Trump campaign.
At the same time, over the weekend, Emerson College had Trump up 10 points in Iowa. With all of this conflicting data coming at you, how do you make sense of this all ahead of tomorrow?
Yeah, it's tough. I mean, and there's a lot of conflicting signals, most of which are showing this to be a tie or toss-up race. The one thing about the Seltzer poll is that if you look at her track record over the last 20 years, she's almost nailed the margin in Iowa. And the Emerson poll, no disrespect to them, they just don't have the same track record in the state. So I'm not convinced that Harris is going to win Iowa. That would be indicative that this is a true political earthquake, and she's on track for a massive electoral college victory. But I do think this is a poll that you have to take seriously and provides the clearest signal yet. We've seen that this race is not, in fact, a toss-up, but is one that would favor Harris, if it's true.
This poll could be indicative, though, to the upper Midwest, especially white women. Do you think this puts her in better position than Donald Trump in a place like Wisconsin?
Yeah, Wisconsin's demographically very similar to Iowa. It just happens to have Milwaukee tacked on to its eastern side. And I think that means that the rural parts, if again, this poll in Iowa, if it's true, is an indication that the rural parts of Wisconsin, potentially the rural parts of Michigan, are moving towards Harris, being led by women. You look in the poll, in the Iowa poll, 51% of Harris voters said that defense of democracy was their top issue, and about a quarter said that abortion was their top issue. I think defense of democracy kind of codes as I just want to vote for Harris because I don't like Trump, but that abortion issue is a huge turnout driver. And again, Iowa is unique. Wisconsin does not have the same abortion law that Iowa does, but I think that there's at least a good possibility that these results are correlated, showing Harris with potentially much more strength in that Rust Belt corridor than other polls are showing her.
John, tomorrow is not election day. It is the end of voting, and that's essentially what we have seen pretty consistently is almost half of Americans have voted versus the total that voted in 2020. What can we glean from how many people voted early, and does that give us any sense of who has the edge?
I don't see a lot of signal in the early vote. I think it does show enthusiasm, but it also shows that people are gravitating towards early voting. I voted early in this cycle, first time I've ever done that. And I think it's a growing trend, particularly in the Sun Belt states, Nevada, Arizona, Georgia, and North Carolina. You are seeing people adopt this more and more. I mean, it does show a lot of enthusiasm. We could potentially get turnout levels that rival the 2020 turnout levels when about 2/3 of the country, eligible voters, showed up to vote. But I don't see a lot of clear signal of vote preference. In fact, the only place where you might be seeing a clear signal is in Nevada, which looks like it's trending towards Donald Trump right now. Other than that, it's mostly Democrats still prefer the early vote, so you would expect them to be doing better in the early vote, and that's basically what it seems like you're seeing right now.
John, your Asia group has basically been saying that Trump has a small advantage and that most likely the House will go with the top of the ticket. The Senate, a lot of people think, is most likely going to turn red. Do you still feel that way, or have some of these last-minute polls changed that view?
Yeah, this polling over the weekend really challenged our view that Trump is the moderate favorite. And, I think for structural reasons, I still see him as being slightly ahead here. Harris is the vice president to an unpopular administration. The top issues are still immigration and the economy in most polls, but there's a very plausible path for Harris to win this thing. I'm feeling much worse about my conviction about Trump, which was already very low this morning than I did on Friday morning.
I think the bond market feels the same way, John. We'll leave that there. It's good to catch up with you, sir. John Lee there of your Asia group. I want to keep returning to this move in the bond market. Yields down by 10 basis points. No big data points this morning whatsoever. So this is off the back of the weekend's news, according to a lot of people. Priya Misra of JP Morgan made the point about 20 minutes ago that half of the move over the last month or so was down to Trump potentially winning this election and leading potentially to a red sweep. And Lisa, much of that move was independent of the polling that we'd seen, which had indicated that this race was still very, very tight. That poll over the weekend, whether you believe it's an outlier or not, it's enough for a lot of people in this bond market just to say, okay, let's rebalance things just a little bit going into tomorrow night.
How many notes did you get over the weekend? Red flag, red alert. Hold on, this actually is something you need to pay attention to. This pollster has gotten it right for every single election going back a long time. You got to sit up and listen, and the market's on the wrong side.
It spooked some of those bond shorts just a little bit. Yields are down 10 basis points on a 10-year. We're down 5 at the front end of the curve. Up next, Anita Richardson of ADP on the state of the U.S. labor market going into election day.
If I were at the Fed, I would be thinking about the tools that we have in the toolkit differently. I would be utilizing quantitative tightening, and to a great extent, they have. Post-COVID, $12 trillion came into the global economy from central banks everywhere. And right now, we've seen about $5 trillion has been hoovered back out. That still leaves $7 trillion sloshing around in the system globally relative to where we were before COVID. Now, adjusting that for, larger GDP and GDP growth globally, probably we need to see about $3 trillion more come out before we get to an equilibrium of where we were before COVID. I don't think the Fed really appreciates the quantitative tightening tool as much as I do, and I think as much as the markets do.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
If you look at the next couple of years, rates on cash are coming down. Now is the time to make sure that you have a bond portfolio because you will get higher returns there over time.
The first back-to-back weekly loss on the S&P 500 going back to early August. We're looking for a bounce. We're up by a little more than 1/10% on the S&P 500. On the Nasdaq, up 1/10. On a Russell, the same amount. In the bond market, this is where your attention is this morning. Down at the front end by 5. Down at the long end by 10. The 10-year 428.27 after a move of a little more than 14 basis points higher last week. Even with that noisy downside surprise on payrolls, we take 2/3 of that move back just this morning in the last few hours.
So here are a couple of questions to ask around this. Yes, a lot of people are tying this.
Answer that question. I'll try and answer that question. I'll try and answer that question. What is a Trump trade? I'll show you a Trump trade in reverse. Dollar Mex, intraday. A 1% move in Mexico's favor. That is a stronger peso this morning.
Yeah, a lot of people say that weak peso, short peso, is a key trade for the Trump potential victory, since any tariffs on Mexico could potentially really hurt that country. It's the reason why it's one of the favorite pairs. Long dollar is another one. Long Bitcoin, long Trump entertainment and technologies.
Short bonds.
Short bonds. I mean, these are some of the trades that you see coming out. And the question is, will they hold past that knee-jerk reaction?
I'll be looking for the financials as well around the opening bound about 3 hours' time to see how that sector performs. Equities then up by 0.2%. Big bid.